We've spent almost $3 trillion. So there's clearly going to be fatigue about coming up with money. That's why I think what Glenn and I are emphasizing is spend everything you have to control the spread of this virus. If you could wave a magic wand and have a vaccine next week, we could go back in the economy to where we were. But even without a vaccine, you've seen numerous countries around the world come out of lockdown and their economies are recovering because they did enough testing that the only people that have to go out of commission are the people who are infectious and can get other people sick. Now, if we're just going to argue about how much money can we burn to keep warm while the heater is off, I fear that it's going to turn it into a regular business cycle. And in regular booms, the unemployment rate comes down at most 1.5 points a year. So if we get on the regular road, we are a decade into this thing. So we've got to go the other way.
Hey, Becky. Becky?
Yes, Steve.
I just want to read you a note here that I've gotten a chance to read from the BLS, which basically says the unemployment rate probably should have been 5 percentage points higher, saying that if the workers who were recorded as employed but absent from work due to other reasons had been classified as unemployed on temporary layoff, the overall unemployment rate would have been almost 5 percentage points higher than reported. So let me just give you
What does
a
that
few
mean?
other
Does
data
that mean
points
people
I've
who
been
were
able
working
to...
at home or people who were at home and not getting paid, Steve?
Employed, but I mean, they still had a job. I assume they were still being, I'm not really sure, Becky, exactly what that means there. But the note does say that the overall rate would have been 5 points higher than reported on a not seasonally adjusted basis if they had been recorded as unemployed, not work due to other reasons. There were also some other issues that might have pushed
This whole talking thing is just not.
I don't get that.
No, I don't think so. I think at the time that they were unemployed, that the survey was taken, they were employed but absent from work due to other reasons, over and above the number absent for other reasons in a typical April, I guess is what they're saying here. The number of temporary layoffs, which is a number that we had talked about in the prior, was actually up tenfold to 18 million. Permanent layoffs was 544,000. And just a couple quick things. The African-American unemployment rate up 10 points to 16.7, which was the same as the white unemployment rate, rising to 10 points to 14.2. The Hispanic unemployment rate looks like it suffered worse, though, up 12 points. Also, women up more than 2 points more than men. And then this is something that I think has political ramifications here. Less than a high school degree, your unemployment rate went up to 21.2% from 6.8. Bachelor's degree and higher went up to just 8.4%. So all kinds of information in that as to the split in the society and in the economy here over who was most badly affected here by this by the first round of layoffs due to the coronavirus.
Hey, Steve, just to clarify, you said 18 million of the, what was it, 20.5 million layoffs are considered temporary. These are people who think their job will come back in the next 6 months or less?
On temporary layoff, yeah, that's the number, 18 million.
I mean, that's
and
good
they are
news.
classified.
Obviously,
The number of unemployed persons.
People don't control their own fates. This is up to their companies, but they have the impression, at least from their employer, that they think they'll be coming back.
That's right. That's right. So the number of unemployed persons reporting being on temporary layoff increased about tenfold to 18.1 million in April. The number of permanent job losers increased by 500,000 or 544,000 to 2 million.
Twink.
Steve, Steve, that would actually seem quite promising if
What
you
do you
look
want?
at other financial crises. Historically, when we've looked at furloughed workers, that's actually been one of the great indicators of how quickly we come back. As you mentioned earlier, the big issue is whether these furloughed workers are right, whether we're playing a confidence game, if you will, or not. But you look at that number, is that higher than you would have thought? By my expectation, that is much higher. I thought that the losses would have been considered, quote unquote, more permanent.
I don't think people have a reason to believe that those losses. I don't think people should have a reason to believe those losses are permanent. Now, look, we talked about this a couple times. There's two waves here that are hitting the job market. The first wave, and I disagree a little bit with Rick because the data show that people stopped going to work, stopped going to malls, closed their businesses down before the governments did. That's pretty clear. in the data.
I did everything
then
I
you had
could.
a series of closures that were government ordered, and now you've had some reopenings that people haven't come back. So the extent to which the government is responsible for this and consumer employer behavior is one aspect of it. But then you have second round. Let me just finish here. Then you have a second round of hits to the economy that are going to be just economic shocks. In other words, even businesses that could be open may not be open because others are closed for whatever reason. And that's why we're seeing these high unemployment claims in the past week. And that's what bodes badly, I think, for the month of May.
Hey, Steve, just look out a little bit farther, because the other big issue is that these PPP loans,
months for tons,
which should be granted or forgiven, if you will, extend to the end of June. There's going to be a big issue as to what happens on July 1st with so many of those people, some of which are being employed simply because the loans exist. And then there's a huge question of whether they're going to actually be able to go back to work, whether those businesses will continue. How do you measure that? Because they're clearly not in these numbers right now. They're continuing to be employed, but in some cases artificially so.
You know, Andrew, you just point to what you, Joe, and Becky do all the time, what I'm doing all the time, which is pushing the story and the questions forward, which is the government, is the Fed, the Treasury, are they preparing for what happens right then? There could be another round. We could also, by the way, have people on payrolls right now that are being paid by these PPP loans that, as you suggest, may come off in July, which is why this $22 million is not about the past, it's about the future. It's about how to get people back to work. Is the government prepared for this thing to go on further? Does it have the right incentives in place, the right systems in place, the right health systems in place to get people back to work now? I have not really heard a convincing argument that they're ready to go back to work. When I look at the high-frequency data, I look at Atlanta, I look at Austin, I look at store closings, I look at traffic, I don't see people responding necessarily forced to these reopenings. And that could be not because the government's closed it, but because people have decided not to go.
Hey, Glenn Hubbard, you want to weigh in again on this? We've talked around a lot of different directions, but again, coming back to this idea that 18 million of these 20.5 million people think that their jobs will come back in the next 6 months or less. I know they don't control their fates, they don't control their destiny, that's up to the company, but that's the indication they've been given at this point. Is that at least a silver lining on some of this?
I think it can be, and it's not an unreasonable expectation for them if we stop a mass wave of small and mid-sized business failures. The point's already come up about the PPP program. The Fed will be standing up its so-called Main Street lending facility, but we're going to need help for small businesses and mid-sized business employers, whether it's partial wage credits, whether it's an extension of PPP, whether it's the Fed getting its act together. We need the Treasury Department active in thinking about these things now.
And I guess, Glenn, to further that point, what happens if a state says go ahead and reopen, and like Steve said, nobody shows up? Do you continue to help them in that environment? These are going to be serious questions that asked. What happens if a business reopens and an employee doesn't feel comfortable going back?
Yeah, it's a matter of sequencing. People are going to reopen the economy, not regulation. So people have to decide it's safe to work or safe to shop or safe to go to a restaurant. So that gets back to a point both Austin and I made, which is you need to get the public health aspect of this right with testing and tracing. It'd be great to have a vaccine. That's going to be a while away. Therapies would be great, but make sure that people feel safe. If we do that, then I think incremental government assistance can help. If we don't, we're just throwing tons and tons of money at a problem that we're not looking at quite right.
Kate, how does the market kind of interpret all of this? And again, we're looking at stocks having a decent rise, but this is coming off of a huge crash that we had seen in February and March.
Yeah, look, I think Glenn and the rest of the panel have made a great point. There are so many variables in predicting economic growth over the next couple quarters, over the next couple years even. And so as investors, we can't focus so much on the size of the overall economy. I think the real project has to be the composition of the economy. And over the last, 6 to 8 weeks, we've started to see some consumption patterns change. What I'm really looking forward to is sort of thinking about the themes that are going to be dominant in the overall market. Where will people feel comfortable spending over the forward quarters? Where will businesses be putting their investment spend, around technology, around systems, and, really focusing on the composition, not the overall size. I have to say, as investors, it's tempting to look really far forward. We always want to have a long-term perspective in terms of forecasting earnings or in terms of forecasting overall activity. And it is really challenging in this environment. So getting to know balance sheets and really digging deep with management teams, I think is the best way to pick the winners over what is going to be, I think, a fairly volatile and challenging few quarters.
Right,
I would also note we kind of believe that the market is at the upper end of the range.
Okay.
What do you want?
Let's talk about the market. Bring in another voice, old friend.
Eye on the
Jeremy
trees.
Siegel,
What's good? I'm trying to take a dab.
from
Would
Penn,
you
a
stop?
historian,
I
professor
fed you,
at
bro.
Wharton.
You
Jeremy,
got fed, man. You went
for
outside.
many years
you gotta go
that
potty
you've
outside
been
again. Is that what it
saying
is?
that the stock market
Like,
over
I've
time
done
goes up
everything
and
I
it's a
could.
great
Futures
economy,
ripping. What's
great
good,
country,
baby?
great things happen. I don't know if you were thinking about the coronavirus. So how has that changed your long-term view of the stock market?
Well, it hasn't changed the long-term view. Certainly a short-term shock of unprecedented magnitude. I mean, the numbers were tragic, but not surprising from what we see. And really, I follow economic news all the time.
Shut up.
I've been following less these announcements that
card's
we've been
covered
getting
still
because
on it.
it's the rear view mirror.
Thank you, sir.
When I get up in the morning, actually, I check all the virus data, the trends in the virus, the trends in the developments in therapeutics, in vaccines. I mean, like the interview that you just had with Stefan Bancel or Scott Gottlieb, who's my guru. That, to me, more informs what is going to happen in the future than getting some historical report on how tragic this virus has affected our economy.
So what's long term, what's in the
Virus
immediate
has
term,
affected
and
our
when
economy.
when do you get back to doing what you would normally do? I mean, are you going to take off a year?
No months for twins. You're the man. Let's do a
Well,
dab now.
one thing that's very important and something I emphasized very early on when we began to get this virus news, and I think it's an important reason why the stock market has actually held up so well, is that more than 90% of the value of stocks is from earnings more than 12 months in the future. So these next 12 months are going to be disaster. Is a
But nobody
disaster.
That's
But
interesting to know.
stocks are the
Stocks aren't
longest lived
valued on
assets,
this year.
and more than
valued
90%
on
of
the
their
years
value
after.
is earnings from the second quarter of 2021 beyond. Now, what we're going to be there depends on therapeutics and vaccines, and that's why any encouraging news on that is so great for the stock market, far more important than, whether
Jobs
unemployment
today.
claims are going up or down, or
That kind of
durable
makes
goods
sense.
are going up or down. I mean, we know that this impact has been dramatic. If we get therapeutics
Dude,
that
eye on the
reduce the
trees. Thank you for the
severity
follow. What's
of
going
this
on? How you
disease
doing today?
to a bad flu, or a vaccine that could inoculate
Let's do ourselves a
the
dab,
at-risk members of the community.
Right, baby?
Again, that
Who's
reduce
dabbing
that
with me
fear.
this morning?
Wow, I think 2021 can be a boom year.
So you,
Who's
with the
dabbing
liquidity
with
that the
me
Fed is adding,
out there?
unprecedented.
know?
It could be a really good year.
So, okay, two questions. Number one,
get the focus
you
on
think
it.
when we were at the lows, whether a month, 6 weeks ago, whenever that was,
look at
you think that was a
that.
time
Ooh, did you see that
that if
shine?
you
Did
could
you see
have
that
stomached
shine,
it, you should
baby?
have actually been buying? And do
Got
you
my
foresee
rig.
any problem with
Dabs.
with
The
the
fishy
government
goes, "Not
and
me."
the Fed extricating itself from this, which,
Not
which
me.
could maybe put a damper?
You see how
on
we
what
got square
happens
falling here?
12 to
See how we
18
got
months
square
out?
falling? Scared the
I
fuck
do
out of me.
think that
Scared
the
fuck
March
out
low
of
is
me,
definitely
baby.
going to be the low. I mean, the only worst case scenario is if there's a huge second wave in October. We don't have therapeutics, no vaccine is available, and the second wave of the Spanish flu, as you know, was actually more severe than the first, and there's a total shutdown again. I mean, that's the only scenario. Now, I don't think that's going to happen. I think that's a low probability event. It can't be taken off. The statistic that we actually look at very closely,
Making some
this
shatters
is
this
related to your
weekend.
question, is the monetary expansion. The monetary expansion, M1,
Old
money
school open
supply,
blasting or what?
has gone up 19% in 6 weeks. That is unprecedented. That is more than the entire year
Chat.
that followed the Lehman bankruptcy in September of 2008. So in 8 weeks, we have expanded liquidity in our financial system by more than we did in an entire year.
Woo!
That liquidity, once confidence begins to recover, wow, I mean, that's going to go into spending, and I think that's going into the stock market. And I think one reason the stock market is only 15% below its all-time high is they're looking at that liquidity and say, hey, where is that going?
So you think the lows are in. You think that it's possible that we see new highs within the next year and a half, 2 years?
Yeah. I actually do think it's possible with that liquidity going into the market. I also think there'll probably be more inflation than we've seen in 2 decades. I'm predicting 3-4% inflation. I know that seems impossible now because prices are going down
First
so
move
much.
of the day, chat.
But again, when this liquidity's got to find its somewhere to go, it's all being repressed. It reminds me a little bit like World War II. You know, everyone was rationed. The Fed built up a lot of liquidity, and it exploded in the post-war boom that we had that no one expected. You know, the world was thinking, oh, we're going back into depression. Military expenditure is going to be way down. And instead, that liquidity built up, had a consumer boom. And
you got to get yourself a vacuum oven.
Stock market.
Why
for
wouldn't
best value back.
Jeremy, why
Put it in there for 24 hours.
$10 billion, why wouldn't a $10 trillion balance sheet and 25 trillion or whatever it's going to be in fiscal, it'll be even more than that by then. Why wouldn't that, when it's engendering inflation, cause rates to go up to where we'd really have a problem? And a lot of times when you have interest payments that high, it puts a damper on economic growth.
Well, rates are definitely going to go. I mean, I think the 40-year bull market in bonds,
open blast,
which is one of the longest bull markets in world history, is over. We saw the lows in March, and we'll never see those lows again. And I think rates are going to go. The Fed will keep the short rate low for a long time, and they're going to let inflation run beyond its 2% limit. The long rate's going to creep up 1, 2, 3, 4 as we get to 21, 22 going forward. We're not going back to those, 16% rates we had in 1981, anything like that. I'm not predicting hyperinflation or anything like that. I'm just predicting a much more stronger push on this liquidity into these next few years. And, moderate inflation is not bad for the stock market. It is terrible for the bond market, but not bad for the stock market.
All right, Jeremy Siegel, Wharton, and thank you very much. It's good to see you. I haven't seen you in a while. And thanks to our jobs.
Get you one of those.
Austin, I'm surprised I didn't hear from you because I mentioned you
earlier
in a very, very affectionate way, but I guess no one got to you about that. Anyway, Austin Goldsmane, we're still locked down. Can't buy you lunch. Kate, Glenn, Mike.
Lunch. Oh, now it's lunch.
You have to get a pump with it.
Rick,
oil.
It's lunch and dinner. It's lunch and dinner. Okay? Let's do both because I can't spend enough time with you. And thank you to Becky and Andrew and Mac. And have a great weekend.
Hi,
Stay
guys.
safe.
I'm
Make sure you
doted,
join
Chad.
us next week. Squawk on the Street coming up right now.
Walk on the street. Let's go.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber, Mike Santoli, live from separate locations. Kramer has the morning off. It is an historic and tragic day in the history of the American economy as an unprecedented 20.5 million jobs are lost in April. Unemployment triples to 14.7, the worst since the Great Depression. Futures up, though, as markets assume this is going to be short-lived. States like California begin reopening today. Oil's up 2%. Yields are up, David, but 20.5 in a data set that has never been more than 2 million in a single month. Just numbers we never expected to ever talk about.
No, the numbers are just completely and totally shocking, of course. Not unexpected, however, given the carnage that's taken place in the economy over the last month as we locked everything down. Those lockdowns obviously ending around the country, things starting to at least normalize in some states,
Look at the
Carl. And the
SPY,
question, of
dude.
course,
The
will
SPY
be of
is
the
going
18 million
apeshit
workers who
up.
describe themselves as a temporary layoff of that 20 plus or roughly 20 million. How many really will get their jobs back, I think, is a key. Given the market's reaction
this?
today,
2 in
there
the
seems to be
morning.
an expectation, perhaps, that most of them will. But that will remain a question over the next many months.
Is it over?
As we
It's
hope,
over.
of course, that the economy does start to return to some semblance
Can you get
of
your
normalcy.
BB to show? Yeah, I have 0.
Yeah, Mike,
all
lots of
the fuck
internals to
in.
dig through here. People going to parse U3 and U6.
0.5 of a big blind,
Average
just for
hourly
you,
earnings
buddy.
show a bit of a chasm between
Just for
lower
you.
paid employees in this country and those with higher wages who, judging from the data,
Queen's
lost their
gone.
jobs at a slower pace.
And it's gone.
Yeah, no doubt. It certainly, first of all, it knocks everybody's idea of what a trend is. There's no way to necessarily handicap the cadence of this
Rebuying,
number
that's what we're doing,
against what
rebuying.
came before, what's likely to come next week. So I do think that the distribution of pain is very clear here, which is that people,
Should look
more
at Wall
hourly
Street bets for
workers,
some funny
no
shit.
doubt.
Every morning, get a good laugh. It's true. It's true. Not to brag, but it looks like I'm so autistic that people are writing articles about my exploits. Little woozy vert. Gambled 500K on Amazon call options. However, he is a minority who gambles pay off. Most Wall Street bettors lose their shirts. Some via bad luck, some via utter stupidity. Some are even willing to lose 5 figures just for a laugh. Take Reddit user Little Woozy Vert, who blew 20K on a less than 1% chance outcome, betting the S&P 500 would fall over 40% in 24 hours. One Reddit user who bought 780,000 of S&P puts, betting on a market collapse after the crash had already occurred. But it's not just reckless YOLO bets that show the stock market is hitting a peak gamble mode. You know things are crazy when Barstool Sports CEO Dave Portnoy makes a switch from sports betting to day trading. Of course, he's down 600 in a matter of days. What is Trader Magazine? Is that the Wall Street Bets Hall of Fame publication? Shit, I read it Transgender Magazine in my head. Thanks for the award. Time to see my eye doctor. Seems like you might have dyslexia. I thought the word was dysphoria. What? Your return without J Powell. Your returns with J Powell. Oh my god. What gives people feelings of power, money, status, leveraging positions, and unrealized profits? Yes, I want to re-enter this dumbass fucking tournament for $3.30. That's going to torture me all day. Please, nothing I want more than to torture myself. I thoroughly fucking enjoy going queens versus aces and jacks. I love it. Getting that thing out of my face. Spy calls. Chomp, chomp. Chomp. Permable. What happens when you buy stonks on March 24th? Ooh, killed it. Up in everything. That's what's up. Am I going crazy? Is the government keeping the SPY up in after hours when volume is low and they can prop up the price after a big sell-off? What are you talking about? They don't buy individual stocks. Put my entire life saving in the hands of a mouse because of DD from girl I banged that plays Cinderella at Disneyland. True story. What? Put my entire life savings in the hands of a mouse because of the DD from a girl I banged that plays Cinderella at Disneyland. Oh my god. Infinite money hack. I have a feeling yes. U.S. government with backing of Fed has rolled out a huge stimulus for business and people. You, the people, may receive stimulus money. This money is not to help you, but to help businesses. It's the stimulus for stimulating businesses. The theory is that new debt taken out will be taken care of by increased consumption. Nintendo, Netflix, Amazon, Walmart. You do not spend this money and do not keep in bank. Interest rates will be planned if you keep in bank. In fact, pay off all debts and withdraw all cash. This will confuse Powell and Munchin. Economy not stimulated, so the economy recovery team will panic because deflation is setting in. Then we get more free money. Double, no triple this time, till December. Forever UBI. As long as you keep saving the stimulus money under your bed, the government will keep sending more. They have to. Without consumption, the economy will crash with nothing witnessed. Remember to make this infinity money hack. Do not consume. If you consume, the money will stop flowing. By not consuming, paying off debt, and keeping cash on hand, you are removing the support beams to the Ponzi scheme. That's great. I'm so glad someone else is on mushrooms right now. Trip Hard is fucking all in on Spy Puts Profits spiritually. Oh my god, that's fucking great. The comments are better than the post, dude. The world is a fucking amazing place. It ain't much, but it's an honest plus 1,426%. How can I change the volume of it? Where's the volume?
Don't know where I'm going, I'm a goner.
What is going on here? Where the fuck is the volume button? You don't have volume? You guys don't know how to use fucking volume up and down? What is going on here? I'm not even gonna listen to it. Fuck your shit. Nobody cares, bro. Nobody cares. No volume? Nobody fucking cares. God, that was dumb. I'm so much better at being lucky than you. I have seen the Gov video, hell yeah, where that kid loses all that leverage money, oh my god, in seconds. Jesus. Shit is priceless. That is a good one. Dear God, when I ask for 5,000% return, this is not what I mean. What do you mean this isn't what you mean? $350. $68 calls. When it's trading at $60, strange I'd expect to see not look like that might as well hold. Why are you quoting your own comments? Do you know who I am? Do you? Why not? Keys the fuck out of me. 2 seconds, I'll never get back. Damn it. What? Uber. I enjoy losing money and unprofitability and Uber Eats. Investor. You said you'd make money. Oh, I am. I'm only burning your money. All you care about is profit. The market deserves a better class of tech stock. Oh my god. Tell your wife she comes with me now. Your money is gone. How about I lose another $5 billion of your money this quarter? And then we'll see how loyal your wife really is. The Robin Hood relief. Oh my god. Is this really a thing? The Robin Hood relief rally. You don't panic, sell, and ride the crash. Oh, is this just the whole thing? Like, yeah, we saw it. No, we watched it yesterday. Hedge fund.
Come and pick us up. And Doug, sharpish.
Nah. Oil price.
I don't want to fuss. And I don't want to put a bullet in your
Bull
face.
bear
Give me
gambler.
Exactly what I want. Fucking murders. What's your name? Shoot him. Ooh.
Let go of the gun.
So, you're obviously the big dick. And that on either side here are your balls.
On the other side,
There are
of
two
your
types of
balls.
There are big brave balls, and there are little mincy faggot balls.
These are your last words, so make them a prayer.
You know, dicks have drive and clarity of vision.
Bears have drive and clarity of
They're
vision.
not clever.
They're not clever.
They smell pussy.
They smell tendies and they want a piece of the action.
You thought you smelt some good old pussy.
Good old tendies.
And have brought your two little mincy faggot balls along for a good old time. You've got your parties muddled up. There's no pussy here. Just a dose that'll make you wish you were born a woman. Like a prick. You're having second thoughts.
You're having second thoughts.
You're shrinking. And your two little balls are shrinking with you.
Paper hands.
The fact that you've got replicate written down the side of your gun. And the fact that I've got Desert Eagle. .50. Written on the side of mine. Should precipitate your balls into shrinking along with your presence.
Along with your broker balance. FOMO regrets.
Fuck off.
Log off. Wrecked Wall Street bets. Imagine having big options that expire. RIP. Yeah, you can still close positions. So many people don't even know what to do. They don't even know how it works. Jesus. Yes. Down you go, Square. Down you go. What time is it? 9:17? Oh.
Explain like I'm 5.
Who wants some ice cold, refreshing lemonade?
Everybody,
Cheers.
right?
You could spend your allowance money on anything in the world. What would you spend it on?
The Wii games.
The Wii games.
Thought he said weed. I was like,
Babe
holy
legs?
shit.
Beyblade.
I don't know what that is. What's that?
Baby legs.
If you invest in Langan's Lemonade Company, you can turn that $20 into way more than that. Okay, so here's what we're gonna do. I'm gonna give each one of you 2 shares in Langan's Lemonade Company, and we're gonna hope that these shares increase in value, okay? So give me your $20 bill, and I'm gonna give you guys 2 shares. Here we go. What happens if everything goes badly? You guys think you made a good move?
Yes.
Well, I gotta tell you what. Didn't work
Welcome
out
back
for
to
you.
Squawk.
You made a bad choice if you hung on to your shares.
No,
At least in the short term.
You're silly.
Oh, I wish I were being silly, Gabriella. I wish that I could tell you that all I'm about to say isn't true.
You are silly.
But there was a typhoon in the orchard
No,
where
you're
Langan
cuckoo.
gets her lemonade.
You're cuckoo.
And this is what's going to happen to our shares, guys. I know it hurts, right?
Can you only cut one?
Can I only cut one? Sure, because I'm a nice person. I'm only going to cut one. But I want you to symbolically understand
call
that 2
this
of them are
guy?
being cut. All right?
No.
Here we go. Zoom.
2.
No, that's not how that works. You gotta give me that other share back. Your shares are losing value. What are we gonna do, guys? You panicking? Because what starts to happen now is, what if they become worth even less than that?
No,
and less
you're
than
doing
that?
it.
And less than that? Should we just take our shares and get whatever money we can?
Yes.
Yeah, we probably should, right?
Yeah.
Langan has no more money to invest in lemonade.
Because of the people who panicked, I don't have the money to keep the second stand open. It's created a downward spiral.
So what happens is that she can't make any more lemonade. And she loses all her money. And now all these lemonade shares are worthless. So can you guys just explain to me really quickly what I just said? How is this going to work? Yeah, Santino, what do you think?
Like you said, like if we do it like spend some, get some of Langan's lemonade, our $20 will get like bigger, and we can get like more like Wii games and new Beyblades.
You're basically an investment banker at this point. That's totally accurate.
This episode of Explain It Like I'm 5 is sponsored by DonorsChoose.org. It's a great organization.
You're basically a Wall Street banker. Oh my god. So don't ever invest in ADMA. Got it. They're closing the lemonade stand. I understand. Got it.
I know a guy can turn $2 grand, huh? I know a guy can turn that into $800. Hint, it's me.
Wait, I know a guy who could turn that into $800. You can have it. Weeble investors are not the brightest. My prediction is that this may go up, down, or sideways. Literally posted no data to support his claims. Oh my god. Peloton. They're riding a Peloton. That's pretty fucking good. Oh my god. Such an overnight trap, dude. After hours is so crazy.
Rates below that point. The only way to negate that, of course, is for Jay Powell and
Look
company
at this,
to address that. And if you look at the dollar index, this is really fascinating. We've now are in our 8th week, or at least one day in the last 8 weeks, we've settled 100 or higher in the dollar index. Look at it from a March 1st start. Dollar index remains very firm, especially after the jobs number.
This is the
David,
start
back
of a
to you.
downward leg.
Rick, thank you. Rick Santelli. Carrier Corporation reporting its first quarter since being spun off from the old United Technologies. The CEO, David Gitlin.
I have a feeling this is the beginning of a leg down to this red line here today.
Stay with us. We got a lot more Squawk in the Street.
I feel like we're bull trapping everybody right now. Hot leather, huh? Oh my god, they flopped the flush. Fair enough, fair enough. Square, yes, Square. Fuck you, Square. Fuck you, Square. Get wrecked. What a painful day yesterday was to live through. Get wrecked. Microsoft. I wouldn't be surprised if we go down from here. It's just so crazy to me that so many people are having trouble paying their bills and stuff like that. How could we be going back to all-time highs? Like, just getting to 300 on the SPY seems crazy, but that's probably why it's going to happen,
the jobs
right?
number for April, 20.5 million jobs lost. Unprecedented, really. On the other hand, more earnings continue to build a theme of stabilization. We'll get to Roku and Uber and booking.
On the
platforms
other
and a lot
hand,
more when Squawk on the Street
still
continues
moving.
on this Friday.
Fleers Corners up like crazy. D King holding strong. What about Penn? Wow, Penn is raging, dude. Who goes on commercial break 2 minutes before the open? As I'm about to go grab a glass of water, but I can't because I have a hand. Woo! I'll fold, I'll grab a glass of water, I'll be right back.
Bad jobs number notwithstanding this morning, futures are positive, and Mike Santoli, it does sort of bring to mind the dynamic we've seen the last few days where stocks are higher, but the AD line sort of withers throughout the course of the session. It makes some wonder about the sustainability of this, whether we call it a rally or not.
Yeah. Well, the rally certainly since March has flattened out, and that pattern the last few days, you have this kind of pop open of 1% or more. And in the last few days, I mean, the high for the day was almost right around that 2,900 level. We got above there last week by a couple percent. So it seems like there's a little bit of a struggle to get an impetus to get beyond that number right now. Also, just some interesting dynamics below the surface. As you mentioned, it's kind of some wear and tear on the breadth numbers over the last week or so. But also, you've had this extreme outperformance. Everybody's been acknowledging and celebrating or denigrating of the huge mega cap growth stocks. And then on a given day like yesterday, though, you see this quick mean reversion, and the rubber band seems stretched too tight, and the beaten down stuff like banks and other value stocks outperform, and energy. So that's I think, a little bit of the churn right now. Bigger picture, I think the question is, given that there's still this stubbornly pessimistic sentiment and defensive positioning out there, how much more can that fuel, at least cushion the downside or fuel further rises here, even when nobody really has good clarity about where we're headed in terms of the macro, except that it's going to get better from awful levels.
Yeah, although,
David,
Mike, yeah, I'm sorry, go ahead, Carl.
No, I was going to say, we talked about the NASDAQ going positive for the year yesterday. This morning, maybe we'll get people talking about the VIX with a 2 handle for the first time since March 3rd.
Yeah.
And you know what's relevant there, Carl, in part, is that the S&Ps are on the same level as a week ago, and the VIX is down 10 points.
Yeah, but Mike, the S&P is at the same level it was a year ago. It hasn't, I mean, and the NASDAQ's up 13.5% from where it was a year ago. I mean, you can talk about pessimism.
It's very true.
What does that say?
It says there's a composition effect right here. The NASDAQ 100 year to date has outperformed the S&P industrial sector by 40 percentage points. I mean, the market inside of it is not saying things are just as good as they were last year. They're saying we can hide.
I don't really have any plans for today.
NASDAQ is flat year to date. Absolutely.
Our money's
40%
tied
of the
up.
NASDAQ is the big five stocks.
Currently,
So the
we're
big
waiting
five
for
are
Square
21
to
or
just
something
burn away
percent
a
of the
profit
S&P.
for
They're
us.
40% of the NASDAQ. We're not
$64
talking about
profit.
thousands of
I like
stocks.
that.
We're not talking about even the wisdom of crowds saying what the economy is going to look like. We're saying these financial assets attached to these long-lived cash flows are right now in this
We're really
environment
watching Square. We need Square to stay within 85 and 55.
I totally get your
we're
point,
looking
although I
really
would say the
good.
S&P
It was
500
scary
closed yesterday also at that January
Yesterday was getting
2018 high.
scary.
So you're going back over 2 years in terms of when we first got to this area.
Yeah, but we didn't
At the big
have
board, by the
over
way, guys,
20 million people unemployed. Sorry,
Yeah,
go ahead,
right,
Carl.
for sure.
Kevin Fitzgibbons, NYSE Chief Security Officer, rang the bell at the NASDAQ. It's Kingsoft Cloud, a cloud service provider in China. But David, if Jim were here, he'd probably repeat what he said several days now, and that the
Yes, it'll have to be in
pandemic
poker then.
effect
Hell
on the
yeah, let's
economy
get
is
it. What's
largely
good?
a
Handle
small business story.
1933. What's good?
And we're here covering public, large cap, mid cap companies that have access to capital and will probably use this crisis to consolidate at the expense of small business.
We need ADMA to.
It's true, and as I said
not
earlier,
die.
even pursue efficiencies that perhaps in another environment they didn't feel as urgent to pursue. And those efficiencies, unfortunately, may result in further job losses or not bringing back the people who have
Seems like
already
they're fucked, though.
been laid off. But you're right, Carl, and you know, we talk so often during the course of this crisis about what behaviors will be like. Will people resume their typical activities? It's hard to say. I can tell you anecdotally, I know one large restaurateur who has a number of different
really nice. That's what's
different price point restaurants in states across the country. They're not seeing the return in traffic in those states that have opened up, at least not yet. They can only be at 25% capacity, but in fact, they're not getting anywhere near that at this point. Is that indicative of anything we can assume longer term in terms of the willingness of people to go back to these kinds of businesses you're talking about? Unclear. But it is going to continue to be, Carl, a key question.
What does that minute mean?
Yeah, among the names we didn't get to so far, guys, David, Uber's up 7%. Of course, much wider than expected loss than we thought. Ridership down 5. Eats up 52. And Dara Khosrowshahi
Worst job
did,
numbers coming
talk
up and
this
the
morning
market
on
is
Squawk
raging.
Box about what he
Cool,
called
lol.
the tale
Yeah,
of
I
two
don't
quarters.
understand
Take a listen.
myself, dude. I don't understand it.
On the eat side,
It's like,
we're seeing that business
do
actually
against what
substantially
logic would
accelerating.
tell you,
That was a
and
big
you'll
business
make
for
money.
us that was already growing very, very quickly in the 50% range.
There we go.
And
Spies
in
bleeding
April,
off
we
now.
saw
People are
the
like,
growth
yeah, I'm not
outside of
buying
India,
up
which we
here. This
invested
is crazy to
around
be buying up
89%
here right now.
as more and more people sheltered at home. As more
Mazda,
and more
it is,
restaurants
isn't
signed
it?
up
Isn't it
for
at a
our
profit
service,
for the year
and
now? They were
obviously
saying.
delivery is a
Probably
very,
not
very
now.
growth
Let's
area
put
for
them
us.
back. What's good? It was so crazy.
Another
Like
disconnect,
overnight,
David.
dude, I was
You lay off
freaking the fuck
3,700
out, dude.
workers.
This climb
The
up
next
here.
day, your stock's at
That
a,
was freaking me
the
out
highest
till
since March
midnight.
5th.
I saw all this. I went to bed like right around here.
and
I was like, all right, maybe
they
it
have had to
peters
push out their plan to get
like
to profitability,
11:30.
but not as far as
When I
many
woke up, I'm
analysts
like,
and
oh my
investors had
God,
expected
why?
Perhaps would be the case for Uber. And
'Cause
again,
we need Square to
3,700
stay
jobs,
below
as you say.
85.
Investors are applauding what they.
You know what we
felt
have,
in
though,
the
Scott?
past
We
was
have
Uber's
all the way
reluctance
through
to
the
cut
next
back
quarter on
in certain
ADMA.
markets where they were continuing to lose.
And those
significant
charges
amounts
were
of money.
one-time
This
charges.
crisis, of course,
So I
has
feel like
forced them to do
I
that,
waited
and so
out
they're
through the
being,
next
strangely
quarterly
enough,
report.
rewarded to a certain extent in the stock
And
market as
I
a result
sold
of that, as you
calls.
say. Mike,
I
you
sold
mentioned earlier,
calls.
of course, the big names
I sold one call.
powering this,
I
the
sold
S&P
one
and the
call.
Nasdaq in particular. I did notice Microsoft, for example, up slightly, but it did hit a $1.4
So I
trillion
have, I'm generating
market value
revenue off
earlier.
the shares
I'm not
I
sure,
earn,
but
so
that
I'm
may
just
be a new
chilling.
high overall.
Yeah, that's well.
We ain't selling shit.
Maybe on the I don't know what the share count looked like, but I think didn't the stock get up to the 190s in February? But it's very close. If nothing else, it was
I was
fascinating.
thinking
yesterday,
the 35 million are out of work. That leaves
underperformed
300
a little
million
bit.
people buying shit from home.
And
that's
Microsoft
true,
was
but
up
they're
like
also
7/10,
worried for their job. Like,
0.7%,
how much are they
and
splurging?
sort of taking
Like,
the
is
day
anybody
off,
going
and
to
it
get
added $10 billion.
new cars, new
So
appliances, and
that's
buying
that's
houses
just the way
and shit? You know what
that
I mean?
this sort of flow has been taking these stocks. And then it's interesting when you talk about Uber. There always was, even when the economy was
This all
doing
can't
well
be
for
Fed money.
employment,
No, I agree
whole
with that. And the
category of
Fed's not
stocks growth,
buying
it wasn't
the
about
SPY
earnings today.
or
We're
buying
looking
the
many years
QQQ,
out,
like,
and so the fact
this
that we're not
is
having earnings
investors
anytime
doing
soon
this, you know what I
doesn't
mean?
really affect.
These are
that
people
much
willing to pay
the
up.
bullish case
There's
on
a bunch
Uber,
of
such as it
retail
is right
traders
now,
that have never
or on
had
the cloud
access
software
to the
stocks
stock
some
market.
degree, or on
I
Roku,
mean,
as
imagine,
it's backing
dude.
off today.
20 years ago,
or
you
on
had to
Peloton, where you have these
go
huge
call or
thematic
talk
secular
to
growth
somebody
stories.
to buy some
Market's happy to
stocks,
play with them.
shit needed to
Meantime,
get sent
their
in
version
mail
of
and
defense
fucking signed,
is
you know,
Microsoft,
like,
as you
dude.
say.
In the age of Robinhood right
So
now, there
I
are
think that's the way
so
the market's
many
been held together
motherfuckers.
here. It's a good
Those 300 million that are like, I got a couple
why
hundred
we're
laying
sitting
around.
here. But that idea that it's now okay for
Like,
Silicon
there's just
Valley to
so
lay
much
people
more
off,
access to the
Uber's
stock
doing it,
market
Airbnb's
right now.
doing it, WeWork's So that's now a little bit of a story of rushing to profitability or margins. But what does it mean though for the vitality of the economy? And
We're
that's
chilling in square. Dude.
I think the market's kind of willing to bet to get lucky on
That's
that
a
front
good
in the short
trade
term, but
there.
it's totally unclear as to whether
Hey, that there,
it's overplayed
that there's a good trade.
Interesting, guys. I'm trying to keep a list of companies that
I
have
opened an account
announced
15 years
reopenings
ago.
or
Scott
restarts
trade
for the
$7
month.
per trade. Damn.
The big ones, of course.
What a tremendous day here.
Oh my
The Long
God.
Island Railroad is screwing up this job. It's a horrible job.
Oh my God.
I've hired my good friend John Valente and his great wife Rosie. They're tremendous people. And I'm going to tell you right now, we have to come in and do this job on time and under budget. We're going to go with Oliveria. Or is it Oliveria? They're good people.
Like doesn't
They're
it?
Italian, but they're good. Or are they Portuguese? I don't know. But they're tremendous people, and we are going to get this job done and done the right way. We are hiring many more pork chops because we love them. They're tremendous people. And we are going to do a great job here, Rosie. I'm going to tell you, your husband is a tremendous attribute to this job, and we are going to get this job done the right way, the union way, and it's going to be a tremendous job. He's a great carpenter. He really is. I eat lunch with carpenters. Thank you so much. Even
I eat lunch with carpenters. Thank you. Dude, this guy is awesome. Who is this fucking dude? Oh my God, that guy murdered it. What a tremendous impression. It's the best, beautiful, the greatest impression anyone has impressed. Come baby, boss baby, China. Oh my God, the comments, dude. Reddit is an amazing place, dude. Oh my God, Reddit is such an amazing fucking place in the world. Ah. I needed that. That was fucking great. Dude, are we going to be up $100 on the volatility crush on Square 2 days later? I'll take it. We'll take it. We have 3 hundos, though, coming to us, baby. We got 3 hundos coming to us, baby. This shit's going to expire, out of the money, pay your kid. Dude, if this just hangs, oh my God, this is beautiful. I saw that this morning, got my day off to the right start. Yeah, for sure. That's great. It's going to be tremendous. He's a great carpenter. I eat lunch with carpenters. You know it's going to be a good day. What's the daily discussion thread? What do we got going on over here? Move his weight overnight. Puts it open. Calls end of day. Been working wonders. Piton puts printed. Just bought RTX calls. No weight belongs all the way down there. The aerospace acquisition. Holding it back. Has a record amount of contracts still held up. Hop on the train. Oh yeah. Disney Plus is down and now I have to spend quality time with my kids. Any advice? Oh my God. Made 50% gains yesterday. Picked up 30 shares of net. Just in case it went up. Down $50 on my shares. I really hope I can cover this. DBX May. $8 calls. Crying. Just a bear trap for an epic run. This is lovely. 290 broken. We broke it like 10 days ago. What are you fucking talking about? We've been here before. This is a fucking lower top on the SPY. What is that person? What kind of cracker? Sometimes I wonder, yo. We've been as high as 296. This is a lower high. We also have higher lows coming in, which is kind of crazy. So we're consolidating right here. Let's look back even further. Look at our laser beams shooting everywhere. Look at our technical laser beam crayons we have out here. Higher highs, higher high to there. So it really starts consolidating probably somewhere in here. I don't know what you consider the start because this is a higher high. And I'm assuming that this is a higher low than something. This looks to be the same. Let's go further back. Let's go further back. And then zoom it in. I mean, are we going back to 297? Is it most likely that we come down and retest this fucking crayon here, dude? It's time to go down and touch this crayon. We're in this no man's land coming off the low here between. I think we either trade sideways until this comes up to us, or we go down to touch it. We meet somewhere. We're going to meet somewhere around 280. Puts on SPY. 280 puts on SPY. Go ahead and thank me later. Do we get an ultimate panic that brings us all the way down? No fucking way. Could we go all the way down and touch this level where we consolidated for a bit before and after the panic? Like 260s? Could we see 260 again? Seems like we will if we break this. If we break what? 275? It could be rocky. It could be rocky. Well, don't get too excited because everybody's saying we're going back to the highs somehow. I don't know how the fuck how. Where's this at? Could we be fighting this level here? We are. In 311, we didn't get all the way to 311. We got to like... Now that's fucking interesting. Are we going to fight between 297 and 287? Where are we at? We're at 290 right now. 290 and 312. 311 seems to be a level on the upside over here on the way down, right? Like we traded up and sideways here for a moment in between, right? So I feel like those are your numbers you're looking at if you're a bull. And if you're a bear, I feel like you're looking at, I mean, either 280 or 275, 270, 280 to 270. I went in at 288, sold at 289. I mean, either way, at the end of the day, 5 years from now, this is going to be worth way more, right? We're talking about like swing trading or day trading. Swing trading mainly. I don't think drastic moves are going to happen, right?
In the following week. Always look forward to that. David,
What's
back
up
to
with
you.
Art, dude? Old man Art be running
Bob,
the
that's
market.
good news. Glad to hear that Art is back. Thank you, Bob Pisani. Well, shares of Carrier are got them up almost 5% this morning. This after the company reported its first quarter as a newly public entity, having been spun off from the old United Technologies not long ago.
What the fuck is this
David
King
Gitlin
call
is the company's
open
CEO,
interest?
and he joins
Should
us
we be
now.
selling
in an exclusive
$30 calls on
CNBC.
fucking
Very nice to
DK?
have you this morning with us, David.
Told you to buy
Thank
puts
you,
it
David.
open for the sell-off. The
I
mouse
want to
falling
start off on a
hard
theme
since looking,
that at
you
least
know,
I'd
some
referenced
calls
earlier in the
day trade.
show.
What?
And we see it from so many companies, which is cutting CapEx.
Why
You
are we
have done
hating
that
on
as
the
well.
mouse, dude?
Cutting CapEx by 40 to 50%, reducing it from your initial plan of, I think, was 350 million to 400 million. Just give me some sense
I
as
just
to
bought puts. Here
why
comes
you
the
made that
reversal.
decision and how you figure
Damn, I
out what the
kinda
right
feel
number
it.
is when you're thinking about cuts you can
I
make.
feel the reversal, baby.
Yeah, we believe in this environment, it's important to be very prudent. So when we looked at CapEx, we did, as you said, we reduced it from our initial plan of 350 to 400 down to 200 to 225.
Square
But
raging
keep in
up.
mind, typically we are at that 250 level. So we're almost commensurate with prior years. And what we decided is that we're going to cut everything that's discretionary, things like we were going to consolidate ERP systems around the world. We pushed that to the right.
QQQ trying.
Frankly, we have a lot of investments we put aside for automation, and it's not the right climate to have industrial engineers in sites. So we pushed some of our automation projects to the right. They will come back. Our view is
Damn,
it's
we got
easier
him to
for
fold.
an
Perfect.
outfielder to run forward than backwards. So, you know, as the year progresses and we see if
Bluff,
the
total
economic
bluff with King Jack
situation
suited.
lightens up a bit, then we will pull some of the CapEx we push into next year, pull it back
Sometimes
into
you
this
just
year.
gotta
But we
make
decided
your
to be
way.
aggressive in this environment to preserve cash.
Right. 80% of your sales are in Europe
His
and
pen
the U.S.
fucked.
One would expect that things are pretty tough right now, both in residential and throughout your other businesses.
Oh my God.
What are you seeing?
I'm so
and
glad I
how
took
much
my profits in
sort of
that.
transparency do you have in terms of what your business is going to look like a few months out?
ADMA looking the same.
Yeah,
though.
what we saw
Fuck.
in the U.S. and Europe is orders for the U.S. were down about 5%, and orders in
Look at D.
Europe were
King,
about
dude.
10%. So the crisis really
People
moved,
love
started in
DraftKings.
China. It
Holy
hit China
shit.
very, very hard. China was very much a V-shape for us. It came down aggressively, but frankly, recovered very aggressively. China orders for us were down 50%, down 40% for the entire first quarter.
What is
But then when you
GMBL?
fast forwarded in China, we were back at
Esports
2019
entertainment
levels as we got
cheaper
into
than
April.
DraftKings?
So
What
a
do they
steep
do?
decline
Is
and a
this where you
steep
gamble
recovery.
on esports?
It feels to us like the decline in the U.S. and Europe will be shallower, but the recovery will be longer.
Let's
What we saw in
analyze the
April
fundamentals
was
of
that orders in the
Gambell.
U.S. were down 25%. They were down 30%
Esports
in April,
Entertainment Group,
in
formerly
Europe.
V Gambling,
And
is a
we are
development
starting
stage
to see
online gambling
some
company.
areas
The
within
company
Europe show
tends
signs
to
of
offer
recovery.
esports
Germany is
enthusiasts
starting
from
to
around
feel
the world,
good.
including the United States,
Italy
the
and
ability
Spain
to
are coming
wager
back. France is
on a
very
range
slow.
of esports
Very
events.
slow recovery right there. 80% of the construction projects
All
in
right, the only
France are
problem
still
with
shut
this is
down.
it's
So
worth
it's going to
negative.
be a mixed bag in Europe, and you're
Book
probably gonna
value
see
per
some of the same
share,
in
negative
US with,
$1.60. It has
different
more
states
debt
coming
than it
back
has
online at
assets.
different times. You're going to see a fairly jagged recovery. but
Valuation
hopefully,
price
as we
to
get into
earnings,
the end of this
negative
quarter and
2.
the next, we start to see those
0.1.
recoveries kick in.
Yeah.
Yeah, you know, specific to housing,
good
David,
on that.
given it's an important part of what you do.
That shit is not
as the number one
future.
residential provider of
Not under
HVAC.
GMBL.
We saw housing starts drop
I
dramatically.
have a feeling if that shit gets
How
popular,
much are you
I feel
impacted
like
by that?
Vegas
And again, what are your
will
expectations on the residential market
scoop
here in
it
the
under
US?
sports betting. And
Yeah, we
their
believe new
platforms,
housing
you know
starts
what I
will be
mean?
down about 10 to 20% this year. And you know, you look
Well, the
back in
situation's
April, there were
currently in, let's
3.8
bet.
million Americans that did not pay their mortgage. So
Damn, at one point it was
you will see some
$37.
deferral as we get
Whoa.
through this year for new housing starts. When we look at our residential business in HVAC, actually 80% of our business is
$15
replacement.
to
So when a
$4?
system breaks,
When was that?
there
That
is
was
going
in
to still be
October?
pent-up
What
demand,
happened? Why
especially
doesn't it
if you
show like
hit
reportings
some
or
key
earnings or
heat waves in
anything?
certain parts of the country.
I'm
You
not
are going to see
fucking
some
with it.
demand for
Can't
that
fuck with
replacement
it.
cycle. We still believe that'll be down about 15%
How do
as
you
well.
know anything? Where do
But
they
we
report?
believe that it's going to be a push out rather than an elimination of demand.
Right. Not to mention, a lot of people are staying home more than they would typically. I guess they might be running their air conditioners in a more aggressive fashion than
I have
has been the case in the
$47
past.
and just bleeding
Yeah,
away.
and I also believe that when they break and they're quarantined, they're
Okay.
going to certainly want to replace them.
I can't do that. I
Yeah, they
can't
are,
do that.
without a doubt.
Nope.
You know, you run factories around the world, assembly lines. I'm curious, David, how
I'm
are you
stuck in
dealing
this
with
one.
social
This is my
distancing
stock that
on
I'm now
an
gonna be
assembly
stuck
line
in.
where somebody's putting together
ADMA for 7
one of these
years.
kinds of systems? Is it an issue
No,
for you,
300 chairs of
or is
ADMA
it something
forever.
you're able to deal with, and is it taking efficiency away from the business?
There's no doubt it's
Fucking square.
causes some efficiency issues.
Fucking
If you
square,
picture
dude, are you kidding me?
a residential HVAC plant where we have a moving belt, often some of the technicians are shoulder to shoulder. So what we've done is we've gone to multi-shifts. We have distanced people. We've staggered them on either side of the belt. We put plexiglass in between the various technicians. I think ultimately what you're going to see is a combination between robotics and human interaction. So you probably, where you have people spaced out 3 feet and you want to get them spaced out 6 feet, probably the spacing in between, you're going to see, I think, a trend towards robotics overall, not to replace the human interaction, but to actually supplement it and work together. So we've managed it, I think, as aggressively as we can, but I would say the fixes we put in place to increase social distancing, I would describe as short-term to make sure that we can keep our plants running.
Damn, that's
I
pretty
think as we
crazy.
get through this pandemic, we're going to come out with more holistic, sustained approaches.
Let's get that money, Killing Bird.
And finally, speaking of the pandemic and impacts, or actually positive
I have no
impacts it might
idea,
have on your
Handel.
business, you
I
know,
hope
there
it
are a
goes
lot
back
of
up,
buildings
but
that may be looking to
it seems like their
increase or
money
upgrade their
making is
filtration
year or
systems, like
two
the
down the
imagine
line.
restaurants,
Like
perhaps,
they're looking years out.
that
and
want to put a
they're in
sign in the
spending
door
mode
that
right
says,
now.
you know, our air is filtered all
Lie
the
to
time.
me. Fuck yeah,
Is that a real
Handle. Let's go,
opportunity for
baby.
Carrier?
Burn that cash right there
Absolutely.
with me, dude.
I think
Pump it
Carrier
up, dude.
will lead the
Buy
way.
a couple hundred
As
chairs.
we
You'll pump the
transition
stock.
what you would
It'll be
characterize
tight.
as sick buildings to healthy buildings. A big piece of that will
Was
be
the shit show
ventilation.
CEO was
Part of it
drunk
is
and
exactly
ignored
what you
questions
just
from
said, is
analysts? What do you mean it was
ventilate,
drunk?
in the ventilation
What do you
system.
mean he
And
was
one of the
drunk?
things we said on our earnings
I
call is
told
that
you
we're
not to
putting
do it.
the VBAC and HVAC with a real focus on
Dude,
ventilation.
What do you
The
mean he was
filtration
drunk?
system, many of the filtration system in buildings around the world today
Oh my
cannot
God.
filter contaminants at a microscopic level, 0.1, 0.3
I'd rather a company
micron
look
size.
future
And
than 6
we
months down the road. I agree with that.
electrostatic
I agree with that.
filtration systems for homes. We have UAV.
And they are growing.
And other types
Their
of
revenues were up
HEPA filters for buildings. So
189%
you're going to see a lot better filtration systems.
So
Air changes per hour is a key metric that buildings look at for healthy buildings. The room I'm in right now, the air changes per hour in this room should be about 10. And many buildings around the world, whether it's universities or it's nursing homes or it's commercial buildings, don't have the right kind of frequent ventilation that you'd expect out of a building. Cleaning ductwork. Ducts ought to get cleaned every 3 to 5 years to avoid bacteria buildup or mold. And most buildings don't have the kind of frequency of duct cleanliness. So I think as you see the new normal come back and people go back
he was
into
mumbling
restaurants,
and
back
didn't know
into
what he was
commercial
talking
buildings,
about.
there's going to be a lot more attention on, am I in a healthy building? And what you're going to see is that companies
was
like
worse than
Carrier will step
UAVs,
up
huh?
and be part of the solution to create the
At
healthy
least this
buildings that
dude
we
was
expect.
sober when he told you he took your money, right?
David, we're out of time today, but very happy that you were able to join us after your first report as a quarterly report as a public company. David Gitlin, look forward to having you back in the future as well. Thank you.
Thank you, David. Thanks for having me.
All right, let's take a quick break here with the S&P up about 1.1%. We've got a lot more Squawk on the Street coming right back.
Sitting out over here. My buddy's like, I just sold at a loss. Southwest Airlines. I bought 10 shares of DraftKings. I was like, look into options trading, not the hype. D-King just went public. I think you find a lower entry before first earnings report or after, depending on how they report. But I don't know, though. We do have a viewer. Killingbird. Not only a viewer, fellow ACR Stormer, fellow fucking streamer out there. ND King. There's a UFC fight tomorrow and everybody's going to be betting, okay. One fight doesn't make all the revenue they need, though. One UFC fight doesn't cover it all. That's the problem. Gamer Dad, what's good? Cheers. He throws the Killingbird cheers out there. First day of trading today. Man, let's go, zeros. I'm all in with crypto, blockchains, Riot, Hive. What are we doing here? What? Whoa. Riot blockchain, oh my god. Hive, Arrow Networks, is this going to be some other penny stock? Yo. Hutmuf 8 Mining Corp. Alright, Zero. Good luck. Good luck out there. No reporting.
Some of the week-to-date Dow gainers. Home Depot's actually in the lead. Behind that, Apple, Microsoft, Chevron, and Visa, all with 5 to 6% gains. We're back in just a moment on this Friday. Don't go away.
Losing money. Was this one about to report today, huh? After Market Central time. Doesn't really show. 80 cents. Learn from me. Don't do it. Learn from me. Don't do it. You see this stock over here bleeding away to $2.50 right now? You see this? Epicola, what's good? Do you see how penny stocks work? Don't do it. Don't do it to yourself. And NASCAR back on the 17th. Thinks it will be over. He thinks D King will be over 30 by the end of the month. It's already trading at book value per share is $7.79. I should
Getting
buy
more
over
indications
30
this morning
easy.
on
I
just
should buy.
how flying will change for Americans from here on out. Phil LeBeau's got more on that today. Morning, Phil.
I mean,
Morning,
you
Carl.
can.
This has been debated, and now it's actually going to happen. The first U.S. airline to say that it will institute temperature checks for all passengers and crew members before they can get on board. It was announced last night that Frontier Airlines, in
Okay.
fact, we talked with the CEO on our 7 p.m. show. He said, look, we are going to do this. This is what passengers want. It'll start on June 1st. So this is how it's going to work. When you show up at the gate, after you've gone through security, they will take a thermal temperature of you. If you are 104 or higher, you're going to be flagged. They'll pull you aside. They'll say, let's take 10 minutes to make sure this was not an inaccurate reading. Maybe you were running to the gate, whatever it might be. If they test you a second time, and when they test you a second time, if it's 100.4 or higher, you will be denied. They will rebook you, and they will work with you to get you to where you need to go. The passenger levels, by the way, guys, we check this every day with the TSA. There has been a very slight uptick, but let's be clear, even though the numbers yesterday are the highest we've seen in 3 or 4 weeks, it's still down 93% compared to a year ago. And this brings up the question, what will airlines and airports have to do to reassure
Passengers are down
This is going to be an ongoing
93%.
debate over
Holy
the next
shit.
several weeks as you take a look at shares of the airline stocks, guys. A lot of people are saying
Options
whose
Noob, good
responsibility
morning.
should it be to test passengers or check passenger temperatures?
When it comes to Square, it is working so far.
Should it be TSA? This will be an ongoing debate, especially if people actually do clamor for these temperature checks for people who are flying.
Really quick,
Wow, it's
Phil.
trading
I mean,
so
that's at the
wildly.
gate. What about everything you go through prior to getting to the gate?
That's why when we talked with Barry Biffle, the CEO of Frontier last night, he said, look, do I think that it probably should happen maybe out by security or at the airport when you first get there? Yes, but we're not going to wait for that to be decided. We want to give people the reassurance now that everybody has been checked when they get on board a plane. And you bring up a great point, Carl. Would it make more sense when you go through the TSA security to have it done there, or when you first get to the airport, which then is another issue in terms of cost, in terms of logistics? How do you set that up? All of this needs to be worked out by the industry, and I suspect at this point it may ultimately fall on the airlines.
Interesting, Phil. We're going to brave new world, obviously, as we're all getting used to. Thanks, Phil LeBeau, on aviation this morning. Good morning, everybody.
You're
Welcome to
about
Squawk
to
on the
own
Street.
your
I'm Carl
ADMA
Quintanilla with
shares
David
for
Faber,
real,
Sarah
I
Eisen,
know.
coming
Well,
to you
it's
live
gotta
from various
stay down there,
locations.
but I probably
Markets
am.
are higher. S&P 2911, NASDAQ 9050,
Own 'em.
despite the historically
Own
bad
it.
jobs
We'll
number.
just
And
sell
now
the
some more
calls
data on
against
the
them.
way. Wholesale trade. Let's get to Santelli.
Wow, it is bleeding
Yes, now
off
this is a March
zero.
final on inventories. They're originally released mid-month at -1%. They've been revised to only down 0.1%, which would be the weakest since September 2011. Now, when we look at trade sales, wholesale trade sales, This number is
The stock
fresh. There
is
was no
bleeding
mid-month
away
read.
to nothing,
Minus
to zero.
5.2%.
It's gonna
And
be
that
worth
is
$0.
the second worst read ever. The worst read was minus 8.7 in Nova of 2008. This series started back in 1992.
I
We're
wonder
not
if
seeing
it
a
holds
huge
at
market
250.
movement on this. Suffice
This
it
is
to say, a
interesting.
lot of traders are paying very close attention to the very low rates on 2-year notes and the fact that deferred Fed fund contracts are implying negative overnight rates from the Fed. Sarah, back to you.
Geez, a lot of shares are moving.
Rick, thank you.
61,000.
Let's hit the big story of the morning. A
58,000, like,
record
that's volume.
20.5 million jobs lost in the month of April. Unemployment rate soaring to levels we haven't seen since the Great Depression. Steve Leisman joins us now with a closer look. And Steve, now that you've had some time to dig into this report, what are the big takeaways?
You really can't stop shaking your head at the report, Sarah. You're right. The numbers really speak for themselves as far as the historic nature of the decline in employment and the increase in the unemployment rate. Here are the numbers that we're talking about. 20.5 million jobs lost.
Does it hold above
42%
250?
Unemployment rate. Average hourly earnings ticking up to 4.7%. This almost surely the result of lost low-wage jobs, or the predominant loss of low-wage jobs in there. The workforce, though, declining by 6.4 million. That's an ominous sign that people are saying they're not in the workforce anymore. A good sign, however, could be in the temporary
Square
layoffs,
falling apart,
which
yes.
is 18 million. And
Yes,
the
Square,
hope is
fall
that
apart.
these jobs come back very quickly.
Fall
Often
apart, Square.
In recessions, temporary layoffs end up coming back to work.
The
Looking at losses by
QQQs.
sector where you might expect them, the industries hardest hit: leisure, hospitality, 7.7 million. Education and health.
The
A lot of
SPY is
doctors'
actually
offices are
fucking
just
holding.
closed.
This is crazy.
Retail obviously taking on the chin at 2.1 million, and manufacturing down. Some of the commentary we received, Sal Gutierrez from BMO says it's the jobs report from hell. More importantly, Chris Rubke writes, April may be it for job losses going forward with the country starting to reopen, but there's a different idea from Ian Shepperson who says it's catastrophe enumerated. We expect a further 10 to 12 million net drop in payrolls, whereas Joe Basuelis writes, the first cut at estimating the damage to the U.S. labor market understates the true shock that the public is absorbing. Indeed, there are some indications that it could have been 20%. Just a couple numbers I found interesting here. The unemployment rate for those without a college degree was 21%. Those, with less than high school education, was 21%, up from 6.8. Those with a high school with a bachelor's degree or higher, just 8.4%. So there's the value of education. It shows you how the job cuts happen, Sarah. It's a long road back. We could go up to 20% the next time in the May jobs report.
Good morning,
I
brokers.
thought some of the
It's
other
good,
breakouts
Chip,
were
how you
interesting
doing?
too. Women hit harder than men. Hispanics and blacks hit harder than whites and Asians. I mean, there's so much in this report, obviously, with everyone feeling
Wow,
the pain.
look at
Steve,
them holding
how
the
do you think
250
about
level.
the fact that a vast majority of these job losses were characterized as furloughs, or the people who think they're going to go back to work? How realistic is that?
Well, look, I think there's two aspects to this. Nobody knows more about the extent to which their job loss is temporary or permanent than either the employer or the employee in that respect. On the other hand, hope springs eternal. There's two waves here that we're following. The first is a shutdown wave that happened because of concerns about the virus. Some of it government mandated, some of it consumers and average Americans just did on their own. They decided either not to go to work or not to go to the mall. There's a second wave here that we're watching, which is a knock-on economic effect wave. That's what we may see in May. And Sarah, I've been troubled by the idea that the jobless claims numbers still remain very, very high.
Look at this
3
thing. Are we
million.
just broke?
Yeah, it's down from
We're
6.6,
broke.
but 3 million is an enormous number of jobless claims. It suggests to me that there is a knock-on effect in the economy
Goes
that's going to have
straight
to
to
play through before
250,
we
huh?
start
And then
going
it
to the
holds
upside
right
with some
above it like
actual
crazy.
positive jobs numbers here. That could be maybe more than a couple months out.
Yeah, we hold our breath on Thursdays. Steve, thank you. Steve Leisman. For more on the shockingly bad jobs numbers, let's bring in Grant Thornton Chief Economist Diane Swank. And on the phone, Brent Schutte, Chief Investment Strategist at
You'd think the
Northwestern
volume
Mutual
would be, like,
Financial
full. That
Management.
many
Diane,
people bought
what were
into
your
this stock
key
for
takeaways
a COVID
looking at,
play is really what
on
happened,
one
huh?
side, the ugliness and the shockingly horrific nature of the scale of
We've
job
already done a
losses,
million
and on
shares
the
and
other,
it's
the
6.5
fact
million
that
yesterday.
it didn't really change the tone in financial markets.
You know, it really is interesting. I still get this sense that many investors are sort of whistling by the COVID graveyard, and that really is disturbing. What I really see in these numbers, even though you saw that really high number, almost 79%, 78.3% were on temporary layoff, I don't think all those workers are going to be able to be called back. We will see some callback with the payroll protection plan loans, which last for 8 weeks and cover 8 weeks of salary. But that again puts us in July with another round of layoffs. There's no way that many of these that are hardest hit in the food services industry, leisure and hospitality, even healthcare and education are going to be able to, and retail, are going to be able to come back to the level of activity that they did prior to the crisis, especially over the summer and as we get into winter months, given that we'll still be social distancing. Also, many large employers have pulled back and are having workers continue to work from home right through the summer months until the fall. That's going to mean no one's downtown in these downtown areas to go to restaurants, even though they can only open partially over the summer. And then you've got the additional
back when I'm ready. We got to get this coin right now.
Meetings and pull back on travel through year end, which is much of the leisure and hospitality industry really relies upon. So although these are temporary layoffs, I fear about how many of these will become much more permanent over the summer months, even if we get a temporary reprieve in response to the PPP loans over the next 2 months.
So what happens when those PPP loans run out, because there is an expiration date, and when the expanded unemployment benefits that were part of the CARES Act also run out? Then what does this economy look like?
Well, then it's even more disastrous. We've already seen food lines in the miles. We know that the SNAP, what were once called food stamps, did not get included in the CARES Act, and so you're talking about a much higher level of unemployment and economic pain than what we see in the overall economic numbers, and much less aid. And I think that's something that we need to see Congress focusing on now, is to not sort of wait and see what's going to happen. We need to be preemptive, because we do know that the unemployment expansions to furloughed workers, gig workers, and the self-employed, that needs to be extended over the summer, and that's something that they need to start doing and thinking about now, because that expires in July, right around the time not only we see those PPP loans expire and layoffs.
We're stuck in it.
But also layoffs at the state and local level, which were already extraordinarily large, 2/3 in education, almost 1 million jobs lost there in the last month. Those are going to really hit hard over the summer in education and first responders if we don't see transfers to the state, because many state and local governments start their fiscal year on July 1st. So I'm very worried about the need for continued aid and relief out there, and then a stimulus bill on the other side of it.
What if
I'm hopeful that Congress will come up with something. I'm worried they won't come up with enough, and they'll wait too long.
Meanwhile, Diane, people were raising their eyebrows at Fed funds futures yesterday, the prospect of negative rates. Now Kevin Hassett's on the tape this morning saying that if the Fed does decide to go there, he would support it, although he reiterated that the Fed has independence. How much of that is on your radar this week?
You know, it's really interesting. The president of the Philadelphia Fed did a speech at the Council on Foreign Relations, the Chicago Council, yesterday, and it was fabulous. And he addressed directly the issue of negative rates and said how inappropriate it would be to do negative rates in response to this particular crisis. There may be, and he has a very high threshold for negative rates down the road in response to a more normal recession, but he couldn't see anything about how negative rates would reopen businesses that literally closed as a result of this. One of the things the Fed is worried about is the number of bankruptcies we see over the next year and how much consolidation we see, and negative rates don't change that equation. The Fed also looked at negative rates as part of their review on what they would use as tools going forward, and negative rates were very low on the list because their efficacy abroad has been very limited and very mixed bag, and especially in the United States, they could have a particular blow to the banking system and money market funds. So this really does not look like the best tool for the Fed to use. They have other tools, and there was a plea by the Philadelphia Fed that really echoed Jay Powell's plea to Congress for more fiscal stimulus and more, not actually stimulus, relief is how we termed it.
We're learning though, this trade is much better.
Let's bring in Brent Schutte this morning as well, Diane, Chief Investment Strategist at Northwestern Mutual Financial Management. Brent, Diane's been talking about obviously horrific jobs numbers, hit to purchasing power, bankruptcies. we're getting to a point here where the Bulls are making a stand in ways they haven't in a couple of weeks.
Right. That's right. I think it was Jay-Z said, controversy sells, but it ain't like death.
Baby snakes, they don't know well enough to not use all their venom on you, right? So they just shoot you the fuck up.
They literally don't know when to stop coming, so they just do it all in you.
Yeah, it's a
Pull out
full
game
load.
week for those baby rattlesnakes.
When you got bit
They
by a
give
snake,
you the full load.
yeah, they give you the whole load. Were you like, oh, this is bad? Did you know right away, like, this is gonna be bad?
And it didn't hurt that bad, but then about 5-10 minutes passed and the poison started to go through my body. I guess went to my brain, and it just felt like, you remember Looney Tunes, smaller like this, and
Yes.
that's all, folks. It felt like that. It was just darkness closing in.
Holy shit!
And I just felt like I was fading out, and it kind of happened like that, and I snap out of it. I was like, I wake up, and then I realized, like, this ain't fucking beast thing.
Damn, that's intense as fuck. What kind of day is this? I'm a lurk, that's what's up. I appreciate it, Chivit. So much for being a roll. I guess I'll get to 50, take my free Bitcoin. This dude raises me. Jesus. Dude, I wanted to look. I saw it, like, gave me a little thing, and it was like, Killing Bird posted something on Twitter. And then it doesn't show me it. Like, how far do I have to scroll from when you said he posted something? Well, alright, let's get it all in again. I mean, it can't happen twice, can it? Twice in a row, same day? Is that fucking possible? We have queens. Thank God it's threes and jack 2. Give us all the money. Give us all the money, baby! Seven levels left of late registration. Like, for real? I clicked the button because it said that he put out a tweet. Who's Clayton Comics? Should I follow this gentleman? I put the stuff I read in your Discord. That's what's up. Oh, I see, I see. Esports Entertainment Group signs binding LOI to acquire online sportsbook and casino operator RG Entertainment in Malta. This is in Malta. Crazy. Gamba. Just food for thought. Gamba. I'm out on the penny stocks. My penny stock is ADMA and ACB. That's all I got. And I'm done with them. I'm forever done with cannabis and penny stocks. We have learned our lesson. We are moving on to getting burnt by tech stocks like Square. That's my goal, is to get fucking fried by Square. Because I can't figure it out. Any direction I go, I get fucked. I get buy the cannabis stocks, I get fucked. We get into the options, we make a lot of money, but then we give a chunk of it back. So we need to kind of learn that game a little bit. We try to do some penny stocks, we get fucked. 1 second, I have a phone call. Bam. 15 bottle order of the CBDs, baby. We need Square to fucking tank. Tank you, bish. Groupon is moving. What is their thing? What is Groupon's ticker? Groupon. GRPN. Groupon. This thing's a fucking penny stock, dude. This thing isn't moving. This thing is fucking dying. Look at that, just straight death off the quarter. Oh my goodness. From where I got in, it sure is. Good luck. Good luck, good luck, good luck. I'm loving this Square bleeding away. It's perfect. ADMA getting its ass kicked though. How low are we gonna let it go, bankers? How low do we let this fucking stock go before we start buying? That is the eternal question. Went all in on EXAS this morning and it's been very kind to me. EX, I love all these penny stocks that everybody's playing. Oh, this isn't a penny stock. What is this? $83 a share? What do we got going on here? Exact Science Corp. What do they do? Second pair, we got a full. We had ace queen there. What did these people even do? And down. It's always late. By the time it gets to me, it's too late. By the time you're all happy and you've made money, you're like, oh, look at all this money I made. Like, it's too late for me to get in. They do what? At-home cancer screening? They reported good numbers and then it shot up yesterday. And then we're just buying at the top here today. Is that what we're doing? Day to buy was here. Back here. Back there. Back there. I'm gonna get into that IV at home stock, trying to find out a sec. What? Like you get like an IV? Oh my god. We are wilding out, chat. We are wilding the fuck out.
Back over to you.
Courtney, it's fascinating. I had to notice that Facebook said they will allow most of their employees to stay at home, work from home through the end of the year. So to the degree people are out shopping again, what categories does it affect in terms of apparel?
Absolutely. I mean, isn't that such an interesting question? I think when you think, I'm thinking about things like kids' clothes, right? What's going to happen with back to school? Is there going to be a back to school? Kids, though, they grow, so maybe you have to buy some amount of clothes anyways. But are we going to be needing dresses for weddings? Will school dances come back if the fall is back for students? So I think there's going to be a lot of categories that are going to be really challenged for a very long time. Kohl's CEO Michelle Goss told me yesterday that they've seen strong trends in areas like home and active.
God, a
both
retail
the
analyst, she
and
probably
the
loves her
customers
job.
that
She's
were
like, you get to
utilizing
shop
that
for
curbside
dresses
pickup. I can't imagine
proms.
that those trends will fall off too much as
Which
other trends
company
would
has
pick
the
up,
hottest
because it just doesn't
clothes?
seem to make a lot of sense, right? There's just things that you don't need. Look at the unemployment rate today. I mean, how much spending are we really going to be doing that we don't have to?
Yeah, and even those with jobs saving more will have an impact on purchasing over the next several quarters. Courtney, we'll talk to you soon. Courtney Reagan this morning on retail. It's going to be a huge story, especially as stores open up next week. We'll take a break here. Markets riding close to session highs. Back in a moment.
Well, at least we know the calls that we sell against our stock. Everything's in the money. There is no out of the money put here. There's no such thing. You want to buy $2.50 call. I mean, yeah, this thing's got to be in the money. I wonder at what point do we sell this thing? Like, at what point is it like we were gonna make less than $300 in a month? It's already giving us $80. Like, at what point do I just take my $80 or $100? Like, what's the number? What's the number that I'm okay with?
Welcome back with stocks up more than 1%. Time for our ETF Spotlight. Today we're taking a look at the chip sector, ticker SMH. It's on pace for its 5th straight day of gains, set to break a 2-week losing streak. The group being led higher today by names including Broadcom, Nvidia, and Qualcomm, but the sector is still down overall for the year. Taking a look at the broader market, you've got the Dow up 327 points. All 30 Dow stocks are higher. Adding the most to the Dow's gains right now, we've got Boeing, we've got Dow, we've got Home Depot also doing quite well. We're going to take a quick commercial break. Stay with us.
Boeing. Home Depot. Home Depot's raging. Dow. Damn, Home Depot's expensive. Home Depot's $234 a share. Damn, RHJF, what's good? I bought BA at market. How many shares did? It's on its way back down. Thank you, TV. That's printing money in the future. Thank you, TV. 15 shares. You almost spent like 2 G's on some BA just now, huh? Okay. Okay. Square burning away here. I believe at like the $68 number is probably the most profitable I could be. Let it go down to 100. I'll sell my blood if I have to. That's what's up.
Good morning, everyone. Welcome back. I'm Sue Herrera. Here's what's happening at this hour. 1 in 4 Americans say they are unlikely to get vaccinated against the coronavirus once a vaccine becomes available. The poll from ABC Ipsos found roughly equal numbers of Republicans and Democrats said they would get vaccinated. Seattle is permanently closing 20 miles of streets to most vehicular traffic.
Why is that?
Those roads had been closed temporarily in April as part of a plan to increase space for people to exercise and get out of the house safely. The city says the move will help
I don't get a yearly flu shot,
against
but
COVID-19. And a German intelligence report is casting doubt on Secretary of State Mike Pompeo's allegation that the coronavirus originated in a Chinese lab. The German magazine Der Spiegel reports Germany's spy agency, BND, asked members of a U.S.-led intelligence agency, Alliance for Evidence, to support Pompeo's statement, but none of the 5 countries provided that evidence. Der Spiegel says the report concluded that the U.S. accusations were a deliberate attempt to divert attention away from President Trump's, quote, own failures. As always, for more on the coronavirus coverage at CNBC, you can head to CNBC.com. Sarah, back to you.
Germany shots fired. They said,
Herrera,
fuck you,
thank
Trump.
Goldman Sachs chief
We're out
economist
here
Jan
doing
Hatzius
shit.
joins us on the other side of this break as we try to make
Damn,
sense of
Deutschland throwing shade.
million Americans lost their jobs in the
Damn.
month of April. Don't go
Shots
anywhere. We're back in just a
fired.
few
What's
minutes.
Trump gonna say today? He's gonna be like, Angela Merkel, you couldn't make it in one of my pageants. And that who? Solidifying Germany. Woo! Look at Square just breaking down. What a beautiful breakdown. Had me fucking scared yesterday. So scared. Profits are just ticking in right
One
now.
investor is
Sniffle
beginning
us,
to
what's
see signs
good?
of life in the
How you
beaten down
doing
mall
today?
operator Simon Property.
Yeah.
Find out why on tradingnation.cnbc.com. More
Zeros,
Squawk on the Street coming up.
Gucci, Sniffless, RHJF out there. Handles cruising with us today. Katos, high in the trees we gotta follow from. Trilon. Ship It's out there. Options Noob. Happy Cola. Gamer Dad. Killing Bird. Happy Cola. I hope I didn't miss anybody. ATP Quan. K-Top. Didn't somebody else say K-Top? What's going on, Glock Gang? Weren't we looking at K-Top already? Earlier today? All you guys are like, you guys all must be looking at the same Wall Street, Reddit, bet, fucking whatever the fuck.
If you're just joining us this morning,
an
unprecedented number on job losses for the month of April. 20.5 million jobs lost. Unemployment triples to 14.7 Depression-era levels. Joining us this morning is Jan Hatzius of Goldman Sachs. Help us walk through those numbers, understand what it means. Jan, good morning. Good to see you again.
Jan.
Good morning. Good to be on the show.
Judging from your research, it sounds like you thought the number of jobs lost would be higher, and you probably think it is higher than the one we got this morning.
Yeah, I mean, we thought it was going to be higher in this release. I think it's obviously very difficult for the Bureau of Labor Statistics to estimate the precise number of jobs lost. And I think there's a
believe in my Toronto's
pretty high probability that ultimately we're going to get some downward revisions to this. And, you know, I'd say on the unemployment rate, the numbers were broadly in line with our expectations.
I get it.
But also in the household survey, there are, you know, clearly also a lot of statistical
Always
issues.
buy the dip. Do not chase.
I would say the one takeaway that I think is a bit more positive is that the vast number, the vast majority of job losers don't view themselves as necessarily permanently laid off. The vast majority were classified as temporarily laid off.
This thing's going back
so
to $1.
I think there's more of an expectation that they will ultimately return to work. But you know,
how did it hold yesterday and then it just fucking tanks
and how quickly
even 2 days
comes back.
On that point, Jan, Larry Kudlow on Fox a few moments ago said he expects 3/4 of the job losses in April to be temporary. What kind of work are you doing in that area, trying to figure out how many of these will return?
Well, it is going to depend on, you know, the path of output growth and of businesses coming back after temporary closure. And I think none of us knows that, but under our forecast for the economy, you know, I do think that the majority of people are going to be reemployed. It's not going to be, of course, as fast as the downturn in employment, but if we look into 2021, yes, we do think that the unemployment rate and other measures of labor market deterioration are going to reverse the majority of the deterioration. You know, that said, it's going to be a lengthy process, and even by the end of 2021, we'll still see the marks of this in the labor market numbers, but not at these kinds of depression-era levels.
How do you think about, Jan and Sarah, which kind of industries and how many jobs cuts here are structural in nature and more permanent? In other words, because the businesses won't come back, or because big businesses are using this opportunity to trim jobs of, you know, that they may not need going forward?
Well, it's difficult to know, of course, you know, to what extent some of those types of job losses are lumped in with the crisis-driven job losses. You know, I think the vast majority are going to be crisis-driven, where firms basically shut down temporarily or lay off a significant amount of staff because they currently don't have significant revenue. I think it's ultimately going to depend on how much of a return of economic activity we're going to see. Our estimate is that we'll see a drop in GDP in the second quarter of 34% annualized. That's about 10%, quarter on quarter, not annualized. And we think that,
all the biotechs are shit.
of the output lost in the first half of the year is going to come back by the end of 2020. And then we'll see further above trend growth in 2021. So that, the majority of the jobs are going to come back. But again, it's a lengthy process, and the further out you go in time, the more you also have to think about more structural changes. And I think it's very difficult to have an answer to how large those are going to be in absolute terms. But I think they're going to be a lot smaller than the short-term changes that will reverse. So for the structural changes in the unemployment rate, I mean, we're not talking on the order of 10 percentage points. I mean, they are we're talking much smaller numbers. So for the most part,
that's hopeful.
For the most part, this is a huge but temporary downturn in our view. That does require, I think, strong recovery in output, and it will continue to require very easy monetary and fiscal policies, which are entirely appropriate at this time when you're going through this type of labor market dislocation.
I mean, we're hearing from industries. Courtney just laid out retail. Phil's been laying out the airlines about how they're looking at reopening and how they're taking measures like temperature checks, but also importantly reducing capacity. Shanghai Disney, for instance, opening at 30% capacity. Restaurants, lower capacity. Airlines, I think 60% capacity for a number of them. If you sort of add all that up and think about that, how quickly and how strongly can the economy rebound?
Well, I think it depends on the sector. I mean, in the consumer services sector, in areas that require a large amount of face-to-face interaction, I do think that's going to be slower. And even by 2021, I think we're still not going to be back to normal. I think we'll basically get back to normal there once we have a vaccine or a more permanent solution to the virus problem. There are other parts of the economy, though, manufacturing and construction, where I think increases in how careful we are and changes in hygiene protocols can bring back activity quite a bit more quickly. I think that's also the lesson that we can take from what we've seen in China. I'm not saying that China translates one for one to what we're going to see in the US or in Europe. There are obviously many differences.
Do I believe we should open back up the country? Slow and steady, yeah.
That I think we're going to see here as well is that
I think it's important that if you have underlying conditions or are older that you stay in.
Interesting.
I think
you mentioned safety protocols, of course.
You can't
just
shut everything down. Like things need to be made, services need to happen. The world can't just grind to a halt.
We know the supply
of
some goods will be limited, Jan. We know about fiscal and Fed balance sheet concerns.
And like
this China trade deal is having some hiccups, according to the president this morning. How does all of that affect consumer inflation, do you think, over the next 12 months?
I feel like we have to,
so I think
at some point,
inflation numbers are going to be below the Fed's target for the foreseeable future. I mean, in the very short term, there are a number of distortions that make the inflation numbers I think somewhat hard to read. So, for example, sit-down restaurant meals are not in many parts of the country available at any price. So how do you come up with an inflation reading in that area?
Something else.
But I think if you look beyond the period of the greatest disruptions, then what are we going to be left with? We're going to be left with still a large number of unemployed workers, even if you go out 6 months or a year. and still
I'm not
a large
writing off
amount
any
of
death. I'm
unused,
just saying we got to
you know,
keep
real
moving. I'm
estate,
just glad I'm
empty
18 and young.
storefronts. I mean, all
Yeah,
of those
now's a good
things
time.
are, you know, disinflationary. I think they're going to weigh on the inflation numbers and are going to mean that it'll be a long time before the Fed gets back to its 2% inflation target. And you know, I think there will be, of course, changes in prices at more kind of disaggregated levels, and some prices are up, some prices are down. But overall, I think we'll be in a low inflation environment for the foreseeable future.
Jan, thanks. Good to talk to you. Wish the circumstances were different today regarding the jobs number, but we'll see you soon.
Did somebody else
Jan
take a
Hatzius
hit
of
that had
Goldman
their
Sachs.
audio on there?
And
I just heard
David, to
somebody, like,
Jan's
exhale
point
a
about
hit.
inflation, it's going to be interesting given that Paul Tudor Jones is on Squawk on Monday on the heels of that Bitcoin position to hedge against long-term inflation.
Yep, it will be interesting to watch that, and of course gold, which has performed quite well during the course of the crisis. Carl, coming up, we've got another CEO of a company that has certainly borne the brunt of some of this. Booking Holdings will join us. The CEO will join us. The company reporting a 50% decline in its first quarter bookings, but the question is, what is it going to see in the months to come? We'll have that interview.
That's not working. We have $390 in Bitcoin. We have a little bit in Tezos, wherever that is. Where's Tezos? We have $7 in Tezos and climbing. How did I get into trading? I just wanted to start investing in something different. Like, I have real estate and stuff, and I wanted to learn how to create another passive income stream, you know? That was my goal. So far we've done good. We lost a little chunk back though. We need to know how to make steady income and not gamble as much. That's why I like this Iron Condor move. Just printing money over time as we chill. ADMA did not work for us. VWAP's below 250 now. Not good. Not good. There's something seriously weird about Groupon. No, sir, I don't like it.
Getting a quick check on where we stand in today's trade. Despite the horrific jobs number, 20.5 million Americans filing for unemployment in April, we continue to see this market move higher, about 1% for the S&P 500. 358 was the high on the Dow, so we're not too far off. All sectors higher in the S&P, led by energy, which is the leader for the week. About a 2% gain for the Dow so far this week. Stay with us. The CEO of Kayak and Priceline parent Booking Holdings is coming next on the show.
This seems like such a painful trading day. need like some music or something?
Yours. Welcome back. Let's get to Seema Modi now, who joins us with Bookings Holdings CEO Glenn Fogel. Seema.
Sarah, thank you. And Glenn, thank you for joining us today on CNBC. We appreciate it.
Well, thank you for having me, Seema.
I think the number that stands out from your earnings release last night, booked room nights down over 85% in April year over year. As you discuss or have discussions with your various brands from Priceline to Kayak, what are your expectations on how long it will take for travel to return to pre-COVID-19 levels?
Well, I think the right answer is nobody knows for sure. And we just have to make an estimate, but I think I'm fairly confident that this is not something that's going to come back in quarters. This is a recovery. A full recovery is going to take years. I think no one's going to feel comfortable, fully comfortable traveling until they can feel that they are safe. And that requires either perhaps we'll have a vaccine, hopefully not too long from now, or an effective treatment would help too. Until that happens, I think people are going to be concerned about travel.
Yeah, last time we spoke, we discussed the importance of testing for the travel industry. What do you think it will take for a traveler to get back on a plane, visit family across the country? Will it be a vaccine? Is that the new passport to getting on a plane?
Well, I think it can be whatever it is.
Is that the
makes
new
people feel
passport?
safe that they're getting on a plane and they're not going to catch a disease. And a vaccine would be the greatest thing, of course. Everybody feels that people don't worry about polio much in the United States because of an effective vaccine. Nobody's going to get polio. We need something like that, but an effective treatment could help too. People didn't think, well, it's a bad illness, but the chance of me being seriously debilitated or even losing my life, if that's eliminated because there are effective treatments, that can work too. And of course, the thing that nobody wants to have to wait for is if herd immunity were to work. We're not sure yet, but that means that there is an endpoint at some point. Enough people will have been infected and recovered, and then there will be that ability to feel safer.
The spy is breaking down.
We want that vaccine out as soon as possible.
Give us some color, Glenn, on what you're seeing in countries that have lifted lockdown measures from China, South Korea to Germany, and are those countries, in fact, a template for what we could see here?
Well, I think it's hard to know for sure. Different countries operate differently, but we certainly have seen some very small green shoots in countries like Germany, like Korea is a good example. But we've also seen things like in Singapore, where a very good system there. They've done a very good job of controlling the infections, but then they loosen things up and infections come back up and they put them back in. Same thing in Hong Kong a while ago. We have to be very careful with this because when you lift up these restrictions, you can have these flare-ups, and then the government needs to step in, reinstate these restrictions and bring everything back down. And that kind of wave recovery is going to be disconcerting to a lot of people.
Glenn, it's David Faber. You've obviously raised liquidity to try to get yourself through this difficult period. Do you feel like you're in a position where, however long it may be, you are going to be able to get to the other side in terms of where your liquidity is? And I know you've laid some people off at Kayak and Open Table. Are you done with the furloughs?
Well, first of all, we went out to the market and we did raise over $4 billion. And we feel very good about that, providing that liquidity that will enable us,
pretty
even
much
worst
there.
case scenario, to get to that
999.22. It's there.
In terms of furloughs or layoffs, we are obviously looking at everything and what's the future size and shape of the company going to be. Really depends on what do we think is going to be the rate of recovery in travel. And look, we see it all around the world. Travel is taking it the worst of any industry by far. And unfortunately, I believe that travel will be one of the last ones to get out because of those things I mentioned about people being concerned about doing. We're going to have to make sure that the company is sized appropriately for the.
Cannabis is expected to deliver year-over-year earnings on lower revenue and when it reports results for quarter ended March 2022. This is why they announced consensus outlook, giving a good sense of the company's earnings, but how the actual results compare to these estimates is a powerful factor that can impact near-term stock price. The earnings report, which is expected to be released May 14th, might help move the stock's
the stock move higher if these key numbers are better than expected. On the other hand, if they miss, the stock may move lower. Jesus. Company is expected to post quarterly loss of 4 cents per share in the upcoming, which represents a year-over-year change of plus 50%. Revenues are expected to be 46 million, down 4.2% from the year ago quarter. Consensus for the quarter has been revised 12.5% lower over the last 30 days to current level. This is essentially a reflection of how the covering analysts have collectively recessed their initial estimates over a period. Investors should keep in mind that may change, blah, blah, blah. Aurora Cannabis needs to hit the reset button, but it's running into a wall of issues and adverse market conditions. The company recently announced a slew of bad news. House its longtime CEO, and is apparently hamstrung by its frail financial position. Going forward, we think there's only one way for Aurora to remain a long-going concern and survive in the long term, which is to focus on being a profitable Canadian company and scaling back its unprofitable international operations. Aurora is too big to be profitable in its current form. The company has one of the largest international footprints among global cannabis players, but it is difficult to see the benefit of a sprawling global footprint. One way of looking at the issue is the benchmark operation cost structure of the top LPs in Canada per the chart below, which includes 3 buckets of the most common operating expenses. CGC is the highest operating cost in dollar terms, with this latest quarterly expenditures reaching a staggering $150 million. Aurora came in second with $107 million of quarterly expenditures, which includes $29 million of sales and marketing, $7 million of R&D, and $31 million of general and administrative expenses. Aurora's overspending relative to its revenue, and there's no near-term catalyst for that chance to give lack of top-line growth. Most Canadian LPs are spending little to none on R&D except Canopy, which underscores the consumer nature of their business model. So Aurora's fucked, basically, is what we're saying. Expected to beat earnings. But the stock is tanking. Cannabis stocks are worthless. It's a dead business in Ontario. Really? Nobody goes to the shops. Do they have legal shops from CGC or ACB or any of that? Can you get their product, and does it suck? It sucks balls, doesn't it? ADMA said, I will not stay below 250. 1 second. People got fucked over. What do you mean? Explain. I'll be right back. I need to use the restroom. Oh, it's very popular. I've tried Aurora, but it's packaged for months, so you get weed that's like 4 months old. Damn it! The store owner had to bid in a lottery to get the rights to make shops in Ontario. Damn. I mean, the stock has been as low as $1.45, so. And they just went from negative 19 cents, negative 18 cents to negative 26 cents. It's not looking good. ADMA, you motherfucking motherfuckers. Requirements were like having millions in cash to secure location and inventory and a bunch of loopholes. Yeah, that's how it is here in America, dude. You can't get in the business unless you have millions of dollars behind you and pay price and people off to win the lottery. Like, shit's rigged. Trust. The whole world is rigged. I'm trying to figure out the stock market to buy into some of the rigging, but I keep buying the dumbass fucking penny stocks that aren't in on the rigging because they're too broke. I need to get in on the fucking high-ass expensive stocks, but I don't have enough fucking money, again, getting rigged out of everything. And now they're opening up to the right. Now they're opening up the right for anyone to sell weed. So all the first people get in the business... First people to get in the business lose out a bunch. Damn, that's what's up, though. The dream, dude. The dream. One day it'll open up here and we'll be allowed to do the same. It will be amazing. God, one day, the fucking dream, chat. The motherfucking dream. Maybe we'll get there one day with the stream. Dude, look at Square just fucking bleeding away. This is beautiful. Give me my money, baby. As the days tick away and we get more in the money, I fucking love it. $21 big blinds in the dream, dude. 3 levels left of late registration. Can we get there in the 330 3K? Now, we did buy in twice, so we're in for $6.60. Had a horrible few days of poker here. This square trade up $83. Like, I'll take that for sure. Like, we're up 5% in 2 days. Deal. 84.50 though. 84.50 though. Just let those bad boys expire worthless, huh? $89. Damn. Square must be fucking just tanking it. Sucks to be Square. ADMA trying to recover. Did we get all the selling out? Did we get all the selling out? Let's recover, baby. Recovery. I don't want to own all those shares, damn it. I don't want to own all those shares. We got 300 of them. We're fine. Dude, I'm fine with that. If this just like bottomed at 237 and climbs out of the hole going into the next quarter's earnings, we could be good here. One mark marker, what's good? Pen bleeding off. Dude, this square trade is where it was at, dude. The Iron Condor is paying off, baby. That's what you love to see. Love to see it, one mark marker. Love to see it. We needed Square to stay below 85 and above 55. We're sitting right at $72. We are just chilling. Up 84 bucks on the trade that ties up $1,500 in cash. This is great. here? I bet 10 big blinds here. I only have 15 though. How about 9? That keeps you above 42. They fold, we take it down. 28 big blinds, 3 levels left. Let's go, baby. ADMA holding above 250, that's what we need. It'll probably break down the square. Break down. Square wants to climb out of the hole, but it's just not going to happen. And we're going to make some luce. Bitcoin couldn't hold that 10K mark, huh? Fair enough, fair enough. Record high number of Americans lost their jobs and yet stocks are moving higher. This seems paradoxical given the economic toll, to say nothing but the emotional toll on millions of people across the country without jobs. While some say this is further indication that the stock market has become decoupled from realities, others say there's clear reason why stocks have rebounded and continue to move higher. For one, jobs data in and of itself is backwards looking. The April figures, which saw a record 20.5 million Americans lose their job, is from the height of the crisis. Since then, economies have begun to reopen. This is still a long way to go, of course, but the market is discounting what's going to happen 6 months from now, when most states will be getting back to business. Strategists also point out that with the losses have been somewhat concentrated, in leisure and hospitality, whose underperformance has overshadowed the strength in other areas of the market. Is the worst over? Pockets of strength. Utilities are chilling. Mining and logging, information, financial activities, wholesale trade, transportation and warehousing, construction, government, other services. We got 30 big blinds. 3 levels left here. These iron condors continue to just bleed into our favor here. Made a little rally. Everybody was just getting destroyed today. Is that what was happening? Gee, infrastructure sounds great. I'm going to buy SWKS when I can next week. What is SWKS? Is that Skunkworks? SWKS. Skyworks Solutions. Shooting to the sky. Cruise control. It's just moving. She moving, baby. That stock is raging. They pay a dividend. Buy, hold, and neutral. Okay. Skyworks Solutions designs, develops, manufactures, and markets semiconductor products, including intellectual property. The company's analog semiconductors are connecting people, places, and things, spanning a number of new and unimagined applications within automotive, broadband, cellular infrastructure, connected home, military, smartphone, tablets, wearable, blah, 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 blah. Dividend per share. Oh, it pays a dividend. Dividend is growing too. I like. This company looks like a good company. $20 PE ratio of 20. Fair enough. Barely leveraged? Man, this seems like a great company. I like your style on that one. I like your style. Just rips it in there, huh? On a jack. A7 no good. Your A7 is no good, sir. We had tough air. On the flop, I mean, we had top pair. He had middle pair.
Oh yeah, square's breaking down. This is beautiful. And we're in 36th place out of 273 with 2 levels of late registration left.
Most of the governors, as you know, we give leeway to the governors, and these are governors that have done a good job in, I think, all cases. I have some that I don't think are doing a particularly good job, but for the most part they have, and these governors have, and we give them the leeway.
Welcome back. California, North Carolina, and Pennsylvania all taking steps to reopen today. And while data from recently reopened states are still very new, some states are seeing different trends in case numbers as testing continues and government officials balance their state's economies and the population's health. In Colorado, the state has seen a 37% increase in cases since reopening on April 27th. That's an average of 448 cases per day. Colorado has also increased testing, though, by 53% since then, so that could be part of the reason. Meanwhile, in Minnesota, the state has seen a 160% increase in cases since reopening that same day, an average of 524 cases per day. Minnesota has increased testing 65% in that same time, Carl. So I think the cases thing is difficult because when you increase testing, you would expect to also increase the number of cases that you're finding. Hospitalizations, for me, are a real issue because that should be a rate that's relatively the same before and after, regardless of how many tests are being put out there, who's being hospitalized with COVID-19 symptoms.
Yeah, it's so true, John. That's why we're seeing more charts that are positives per case, per test. In other words, different ways of slicing the data. As you mentioned, though, San Diego is among the cities that are starting to reopen, having already allowed some residents access to beaches, despite some warnings from the governor. We're joined this morning by San Diego's mayor, Kevin Faulconer. Mr. Mayor, good to have you with us. Good morning.
Good morning. Thanks for having me.
Let's talk about what's going to be open and to what degree. We're talking bookstores, florists, some sporting goods, but all curbside?
Yeah, all curbside for now. You know, from our standpoint, one of the things, we're ready to go in San Diego. We've really been working on it for the last several weeks with the Economic Recovery Group, really comprised of about 30 business associations representing literally hundreds of thousands of employees with one goal. How do we reopen safely? How do we have phases that make sense with, you know, the ability to protect our customers and, of course, protect our employees? And so this is something that we've been focusing on for, as I said, the last several weeks. And it does get to, as you just mentioned, when we reopened our beaches, we did it with a plan developed by lifeguards, with our public health officials, a phased approach that's working in San Diego. Other cities are now emulating that. And so we're ready to go. We want to reopen safely. We want to reopen expeditiously and do it, of course, with public health and safety in mind.
So what sort of trajectory are you using in terms of new cases or hospitalizations or however you want to slice it to judge that it's time? And what kind of data would you need to see to reverse that decision?
Yeah, and I think you hit the nail on the head when we were talking about really the percentage of positives per cases. And that's something that we've been tracking in San Diego County, right at about 6 and 7%. You also do look at hospitalizations. You look at capacity. You look at PPE. And so all of those marks in terms of the flatlining, we've been able to hit in San Diego. And we've been working very closely with our county public health officials because if you do not do it in concert from a public health standpoint and have that consumer confidence and people believing in the policies that you're going to put in place, you're not going to be able to have the successful reopenings that all of us want. And so our approach really has been data-driven, but it's also been driven by, hey, let's develop these procedures in these phases, developed by our small businesses, because they know better than anybody, here are the things that we need to do to keep their employees safe, to keep their customers safe. So we're really hoping that as we continue to move forward here in California, that counties like San Diego that are seeing some of these positive signs have some of the flexibility to move a little bit quicker because we're ready to go.
Mayor Falconer, I was speaking last week with Qualcomm CEO Steve Mollenkopf, who I know you know well. Qualcomm's got a huge proportion of their workforce working at home now, and it doesn't seem like that's likely to change anytime soon. They're probably one of the biggest, if not the biggest employer that you've got in San Diego. When you've got businesses of that size that are keeping people home, that's got to have an impact on commerce as well. What are those business leaders telling you? How are you communicating with them and with the public about whether it's safe to come out as you do begin to open up?
Well, that's right. And Qualcomm, a great San Diego company, over about 10,000 strong here just within the city. And in talking with the folks at Qualcomm, again, being leaders on telecommuting, on safety precautions, that is going to be the future for a lot of us, including the city of San Diego, in terms of employees being able to work remotely. And so that will not be necessarily a negative thing, to be able to do so safely. And again, I think this is all part of the phases of how are we reopening smart? How are we using technology? How, when we open, do we have all of those precautions in terms of building entrances, staggered work times, all of the things done to, A, keep people safe, and B, promote that consumer confidence that when you walk into a business in San Diego, all of those steps are being taken.
And Mayor, what are you doing about tourism? I think there are going to be a lot of people from California, possibly from surrounding states, who want to come to San Diego as usual, especially if beaches are open and it's starting to be that season. When it comes to contact tracing, when it comes to testing, when it comes to protocols in the sorts of businesses and locations that tourists frequent, what are you doing?
And it's all of the above, and that's incredibly important. So as we are upping our number of tests in San Diego County on a daily basis, hiring additional contact tracers. In fact, we're just talking yesterday, we have 1,000 applications. Moving quickly, moving expeditiously. But again, back to that climate that people understand that, particularly as you go back to our beaches, a very phased approach, developed by lifeguards. And San Diegans are following the rules. I was out there on the beaches myself last week with our lifeguards. You can walk, you can run, surf and swim right now, no sitting down. And to see that compliance, I think bodes extremely well for when we start to reopen our businesses. Because San Diegans, just like others in California, do not want to give back the tremendous gains that we've made, the sacrifices that we've made over these last 6 weeks. So I think that's why it's incredibly important for mayors like myself to have these clear policies, to communicate them, and then give benchmarks that says, here's how we're hitting them so we can go to other phases.
The other big news, we're going to talk a lot more about state and local employment in the months to come, especially on the heels of this estimated state budget deficit of $54 billion. Yeah. Do you foresee large cuts to road maintenance, first responders? What's going to happen to employment, at least on a local basis?
Yeah, San Diego's impacted just like other cities. Our estimated revenue shortfalls is going to be about $300 million. So I'm going to make some of those tough decisions now. I'm not going to kick the can down the road, but I'm going to do it on priority city services. So you're not going to see reductions in police officers and firefighters. We're going to continue our road repair, but we're going to make reductions in other places. We've been planning, and we've had some pretty healthy reserves for a rainy day such as this. But the most important thing we can do, I think, is to not delay some of these decisions now, because it's just going to make it worse in future out years. And so I'm really big on making sure that we're matching one-time expenditures with one-time revenue and not using, ongoing.
Are you surprised we weren't better prepared?
I'm both surprised we weren't better prepared, but quite honestly, I'm surprised we've wasted so much time, that we haven't had leadership at the national level to get out tests in the right way, protective gear in the right way, contact tracing in the right way. With lack of leadership, there are 50 homegrown state solutions. And that just shouldn't be. When you see a country like Germany with national leadership, they were able to keep certain sectors of the economy open safely, keep people safe, mostly social distancing, and now start to slowly reopen based on the science, that's the kind of leadership we should expect as citizens in this country, and we're not getting it. We haven't gotten it yet during this crisis, and so you're seeing what's happening, and it's chaos.
That's pretty blunt. Do you lay the blame at the feet of the Trump administration?
I'm disappointed in what I've been seeing, yes.
Damn. Jesus. Staffer for Mike Pence, test positive. Senator Kamala Harris, Bernie Sanders, Ed Markey introduced a bill Friday to give most Americans $2,000 a month during the coronavirus pandemic as historic job losses leave millions scrambling to cover bills. This legislation would provide a direct payment to people who make up to $120,000 through the crisis, and for 3 months after it. Married couples following jointly receive $4,000. Parents would get $2,000 per child for up to 3 children. The plan would be retroactive to March. Bill would try to iron out what critics call an issue of the $100 direct payment to individuals, including a true insurance check. Or U.S. resident gets money, even if they had filed a recent tax return. Or do not have a social security number. It would also be bar debt collectors from taking the relief money and deliver payment to homeless and foster youth. There's talk about something happening, and we'll see what's going on.
From the virus. And according to a new survey from Ohio State University, a majority of Americans are worried about new moms and babies amid the COVID-19 outbreak. 80% of the 2,000 people polled said they would be concerned if they or someone else in their life were pregnant or considering becoming pregnant. As always, for more on the coronavirus coverage, you can head to CNBC.com.
We fucking really cared.
Carl, a lot of people were expecting a baby boom coming out of this, but apparently that will not be the case. Back to you.
Time will tell soon.
Yes,
Thank
indeed.
you very much. We're getting so many headlines out of Washington, D.C. today. Let's get to Eamon Javers this morning. Hi, Eamon.
Yeah, Carl, some news now from NBC. A member of Vice President Pence's staff has now tested positive for the coronavirus. This according to an administration official speaking to NBC News. Now, we know that the vice president was scheduled to go to Des Moines, Iowa this morning. His plane did take off this morning. Took off about an hour late, though, and reporters traveling with the vice president this morning said that a number of staffers disembarked the plane during the course of that delay. Not clear exactly why that may have happened this morning, but an administration official now telling NBC News that a member of the vice president's staff did test positive for the coronavirus. That said, the staff member who tested positive was not traveling with the vice president today to Iowa. So we expect to get some more details from the vice president's office shortly, perhaps when that plane lands in Iowa today. And this, of course, follows that news yesterday that the president's valet, a person in the United States Navy who serves the president, tested positive for the coronavirus as well. The president said that both he and the vice president were tested after that and tested negative. So no concern after the valet incident. Now a new person close to the vice president testing positive as well. Carl, back over to you.
All right, Eamon, thanks for helping us with that. We're going to be seeing and we're looking for headlines like that for quite a while. In the meantime, though, close to session highs, 29.20 on the S&P and 24,250 on the Dow. When we come back, the president of Live Nation on that company's results and the country's first concert with social distancing.
Damn. U.S. oil production is in severe decline and it could take years for domestic production to turn around. Also, we believe that historic and prolific oil production growth by U.S. shale may have been forever altered.
Let's get to Julia Borston now, who joins us with the president of Live Nation. Julia.
John, thanks so much. I'm joined now by Joe Berchtold, president of Live Nation, fresh on the heels of that company's earnings. Joe, thanks so much for talking to us today.
Thank you.
So, Joe, Live Nation just reported that you expect to reach show volume next year and fan attendance that's similar to what you've seen in the pre-COVID years. With so much uncertainty right now, how can you predict that attendance will resume at where it was last year so quickly?
Well, I think the one thing that we are seeing that we're very confident in is the level of fan demand that continues to exist for concerts. We just did a survey of over 10,000 fans, people that go to live events worldwide. Over 90% of them said they're eager to get back to live events. Over 80% of those want to get back to live events within the next 4 months. And it's consistent globally throughout all countries, through Gen X, Gen Y, Gen Z. Very consistently, 90% plus are saying they want to get back to the shows. And I think even more important is we've now been refunding at a large scale the 9,000 concerts that have been impacted by this shutdown. Over 80% of them are rescheduling. And as we offer fans the option on those shows, do they want to keep their ticket or do they want a refund? Over 90% of those fans are deciding to keep the ticket. So the fan that has the ticket to the show that was supposed to be this summer, they want to keep the ticket. They want to go to the show next year. And when we see that level of demand today during these uncertain times, that gives us confidence that the fans will be there when we're allowed to get out and have our shows again.
But Joe, the way concerts look and feel is going to be very different on the other side of this, perhaps for quite a long time. Tell us how you're going to be implementing social distancing measures. And don't you think that people may feel differently about going back to concerts if they have to wear masks or you're limited to 20 or 30% capacity?
Yeah, we've asked fans what matters to them. The factors that overwhelmingly matter the most to the fans is the confidence that there's been deep cleaning at the buildings, that the hand sanitizers are available.
I'm sure the people listening are too lazy.
Following social distancing.
Big
We'll
incentives to keep the ticket, huh?
To reduce the contact, have contactless entry with our digital ticketing, to tie that in, to have the ability to buy merchandise, to buy concessions on a contactless basis. And yeah, we do certainly expect that through the course of this year. And I think we're optimistic that as we get into next year and treatments and vaccines become more available, that we're able to get back to doing shows more in the way that people are accustomed to.
You know, we're seeing Disney getting ready to open in Shanghai
Francisco Health Department is providing
less than
alcohol,
30%
weed,
capacity. How much do you
nicotine, and
expect
other
to limit
substances
your
to
capacity, and
homelessness.
what kind of
They're
pressure will that
housing
put
in
on your
hotels
margins?
during coronavirus quarantine. What
Yeah, I
the
think
fuck?
that certainly over the course of this year, what we're going to see is largely substantially reduced capacity in all of the venues.
What's the stock ticker for Eventbrite? I don't think so.
Develops the proper treatments and vaccines over the course getting into next year. We have hopes that that will grow. But really, our costs are variable. We pay the artists the vast majority of the revenues that come from the door. We then support that by what we make on ticketing, what we make on sponsorship, what we make on concessions. So for the course of this year, there's no issue with the margins or the economic impact. We'll do the shows in the markets globally. We're operating in 40 countries. There are a number of markets in Europe that are going to be opening, with Denmark, Spain, in Asia, with Hong Kong, with Australia, and then markets here in the
Seems to be
U.S.
at the bottom,
we
right?
expect to be getting out and doing shows over the next few months, having that growing from there.
They're not making any money.
Joe,
though.
good morning. It's John Fort. Does this crisis shift the model for live events as far as kind of the business model? Are live events going to be more expensive? Do you build in more subscription or memberships into it? Because if you got fewer people and you still want to make as much money, it seems to me like you got to charge more or add on different experiences somehow.
Yeah, I think that we're very much aligned. We've had a lot of conversations with the artists. We're playing this for the long term for the fans. I think that the artists understand in the short term there's going to be concessions. People aren't going to be making as much money because we're not going to have as many fans in the building, but we're not looking to either only make it accessible to people that can really pay a lot. We're not looking to do anything. We recognize the hardships that exist today. We want to make this accessible to everybody. That's why artists are doing the shows from home today. They want to stay connected to their fans. I think it's as important as we come out of this that we continue to make music what it is. It's a unifying, fun, celebratory event that everybody can access. And I think we're committed to that. The artists are committed to that. And we'll continue to find ways to deliver that.
And Joe, Twitch, YouTube, and others are trying to, I think, edge in on your turf here during this, because they would argue they can be live even though it's digital, and when distanced is the best that you can get, they're offering kind of a live-ish experience. Are you going to push more into digital experiences also? Of course, I don't expect you to back away from physical in-person concerts because that's your strong suit, but do you have to do more digital to prevent encroachment by those platforms?
Well, we're doing that today. Our Live at Home platform has had over 1 million people come to it to find shows. Insomniac is doing their Rave-a-thons. They've had millions of people globally coming to those live events. So we're doing that today. What we're finding when we're talking to the fans, though, they value this to stay connected today, but it only makes them want to get back to the live event more. Live events aren't just going to the show. They're going to the show with your friends. They're having a night out. They're celebrating. They're those Kodak moments that you do a handful of times a year. The live today at home, remote is great, but it's no replacement for that true live event.
Got that right, Joe. I think everybody feels exactly what your own data has told you. Hey, in terms of names, artist names that we could see out there first, are they going to be big tentpole names like U2 and the Rolling Stones, or will they be concentrated in other categories? And if we're relying on outdoor first, does that mean venues in the South?
Rand, we booming today. You look exhausted, bro. Damn, I haven't had any coffee today either.
Yeah, I think we're going to follow the
What are we
facts
booming on?
in terms of where
Danny
we
K.
open up.
Golden, what are we booming
We're
on?
working with the governments again globally to figure out what markets that can do what safely at what point. We're not going to rush it. We certainly have the health and safety of the fans and the artists, all of our employees, first and foremost. So we're not going to try to predict the exactness of where, when, as much as we know from what we're seeing now, that there will be certain countries in Europe and Asia, as well as certain states in the U.S. that are going to lead it. In terms of who's coming out, it's going to be all over the board. We've traditionally done a concert every 15 minutes somewhere globally. We do thousands of arena level to stadium level, down to club level, and I think we'll continue to see that great mix as we come out of this.
Now, Joe, you've been talking about the health of your employees, the health of fans, but what about the economic health of consumers right now? We just saw record unemployment levels, and I know you mentioned that fans are opting to hold on to these tickets for when concerts are rescheduled, but are you concerned that as this economic downturn worsens, more people will be opting for refunds, and fewer people will be able to pay up for some of these pricier concerts?
Again, as I said, I think that we and the artists are all going to play along. We understand the difficult economic situation today. There's going to be tremendous effort to make sure that we make tickets available at prices that are affordable to everybody out there, and that will certainly be a priority. Thus far, the best indicator of what's happening, though, is that 90-odd% of people that are opting to keep their tickets. Historically, as we've gone through economic downturns over the past 20, 30 years, the live event industry has continued to be a priority for how people spend their leisure dollars. And because it's an affordable, approachable luxury, we find that during economic downturns, people may forego that vacation or that more expensive event, but still want to go out and have an opportunity to do something with their family and friends, and a concert fits that bill.
So just a final question on what the future of the concert business looks like.
Yeah, people at concerts just don't know how long it'll take things to normalize. Yeah, I feel that.
Concerts. You mentioned the ticketless entry, being able to buy things with your phone without having to exchange cash or pull out a credit card. But are we talking about a future where concerts are always less crowded if you have staggered seating? What does it feel like to be at a concert a year or two from now?
Yeah, I think we're very optimistic that the scientific efforts underway on the treatments and vaccines will be bearing fruit, certainly within that time frame. I think if you look back over it has just been 2 months now, and the tremendous progress in terms of the number of vaccines that are already in human trial, the work that's been done on several treatments, that all makes us optimistic that as we get into the 2021, the heart of the concert season, a year from now, that we've got the ability to get people back into arenas, amphitheaters, stadiums, screaming, watching the show together, and enjoying that environment.
Joe, thanks so much for talking to us today and giving us a sense of what your business looks like moving forward. Really appreciate it. Guys, back over to you.
All right, Julia, thanks for that. That was great stuff. Our Julia Borstein.
I just sold calls against my shares. Poker Chef Jeff, what's good, brother?
On this morning's
I'm
jobs number.
holding to another till the next quarter. They said they were one-time charges. Yeah, hopefully. Who knows, though? Who knows, Poker Chef Jeff? What are you doing this morning? You'll be playing again today after we get some work done. Let's go, baby. I saw you hit a nice little lick, huh? Dude, we got gypped heads up. I was pretty pissed. Hey, at least you got the heads up. That's what's up, my man. Nice little score.
Hey guys, just thought you might want to know, sales aren't up, they're down. Yes, sir.
Let's get to our Rick Santelli with a very special guest. Hi, Rick.
Hi, Carl, and yes,
Pretty
definitely
close.
a
We have
special
them at
guest. On a special
0.86
day
big ones.
in
He
a
won
very
7 all-ins
strange
in a
way.
row.
I'd like to
Worst
welcome
hand
Ed
one every
Lazier,
time.
former chair of the Council of
Jesus.
Economic Advisors under George
That
W.
is
Bush.
the worst.
Ed, thank you for joining me this morning.
Good to see you, Rick.
Well, listen, I want to know what you think of the number. It shouldn't be surprising. It doesn't make it any less shocking. But I really want you to pay particularly close attention to the big jump that we saw in average hourly earnings month over month and year over year.
Absolutely.
Tell us your thoughts.
Absolutely. Well, let's start with the basic number, the 14.5% unemployment rate. That's obviously a staggering number.
You can pay them to build it where you select the parts and they'll do all the assembly and stuff. You can do that, but it's super easy to assemble, dude. They're all like snap-in Lego parts, you know.
On about the 12th of the month. So since the 12th of the month, there have been a number of unemployed workers that have come in through the initial claims. We've seen that. So right now, we probably have about 40 million workers unemployed, which maps into an unemployment rate that's Great Depression level. Next month, I would expect to see the unemployment rate jumping considerably.
You can go to Micro Center and buy all the parts and walk out
where
with
we are right now.
With all the parts, the
said,
case,
I wanna
everything,
come back
and
to
go
the
home and
points
build
that
it
you raised.
immediately.
There are a couple of numbers that I always look at. The one that I like to follow is not the unemployment rate, but actually the employment rate.
And I mean, it's
this
pretty
time, that
easy and
basically tells the same story.
self-explanatory how it
It's at an
all
all-time
fits
low
into the
at
case.
51%, dropped down 10 percentage points from where it was. Just to give you some perspective, it's about 7 percentage points below where it was during the 2009 recession, 2007-2009 recession. So these are obviously...
Yeah, I mean, they're like
numbers
Legos. Just remember that everything comes with more parts than you need to use because they're all meant to fit, like,
actually going
fit
up
together
and
with
wages
different
going up.
other
You say,
parts,
well,
so they have, like, everything will come with hella fucking adapters
I
and
think
cords
that's
that you
actually a
don't need to
preview
use.
of the
You
kind
know
of
what I mean?
recovery that we're
So
going
it's
to
gonna
have.
look way more
Because what that
complicated than it
tells
is,
us
but everything is
that
built to
firms
just
are going to
fucking
be
snap
losing
in. You put your
fewer and
CPU on the
more highly paid
motherboard,
workers
you plug
and
in your
having
graphics
each one of
cards to
them
the
work
motherboards, you
longer
plug in
hours.
the
Right now,
power.
part of that is created
They'll walk
by
you
the
through all that.
unemployment system. Because
Grab
you
one of
get
the Micro
unemployment
Center
insurance,
nerds
it's better to lay off the workers,
and be like,
have
yo,
them draw
man,
the
I
money
want to build a
from the government
computer.
and have fewer workers on board.
That's my list,
But
I
I
think.
think that's
PC
going
parts
to
picker. There
actually
you go.
persist during the recovery. So what we're going to see is the recovery will first see output grow, then we'll see employment grow, and then we'll see wages grow. That's typical in any
Motherboard.
recovery, but this one will be more pronounced.
CPU.
Excellent. Now, Ed, we're going to switch gears here. I want to move into a different
Memory.
lane. We have two-year
Okay.
note yields right now around 11 basis points.
Storage,
We have
solid
6-month
state
bills around
drive.
13 basis points. So obviously, two-year notes are below 6-month bills.
Gigabyte
We have Fed
GeForce
Fund
RTX
futures
2060
depicting that from
for 8
November
gig
2020
GeForce
on,
OC
we could
video
have
card.
negative overnight
NZXT
Fed
of
funds.
mid-case
Now,
tower,
Jay Powell and
Corsair.
company has said that, NERP, negative
Microsoft
interest
Windows.
rate
Bam,
policy
that's all you
isn't
need
in
right
their
there,
crystal
15
ball.
hundies.
But
Hit the
yet,
button.
it certainly seems as though traders and markets are pushing to see if the Fed has a response to some of these huge 24-hour drops in short end rates.
You gotta make
Your
sure the
thoughts?
AMD stuff
Well,
is compatible
I have
with the
two thoughts
motherboard.
on that.
I'm
First of
assuming,
all,
it says
if
right
you
here,
look at the
compatible, no
European
issues.
experience,
There you go.
negative interest rates have not done a lot to stimulate those
Estimated wattage
economies.
334.
You're
You're buying
might have been
double. You're
worse had
doing
they
good.
not had negative
Plenty of
interest
room.
rates,
Plenty
but there's
of
just
room.
not a lot of evidence that that's done much. So I think the chairman is wise to be telling us, giving us forward guidance that that's not where he's going.
I mean, it's going to be
hope he
better than my
doesn't go
computer.
there.
I know that.
That said,
I'd probably get better
make
memory
clear
if
that
I
this is
could, but
continuing. When you're at zero interest rates,
Just
if you
for
go
speed
5
and shit.
basis points below, you go from 0 to -5. That's not a major move. So this is a continuum. The one respect in which it is not a continuum is what does it signal to the market? What does it signal to the economy? What does it signal in terms of how the Fed is thinking about things? Some have said that it signals that the Fed is willing to do what it takes. I disagree with that. We already know the Fed is willing to do what it takes. What I think it signals is if they go negative, it essentially tells us that they are out of weapons. They basically have nothing else they can do. And my view of that is that that kind of move would actually create more uncertainty, create more investment distress, and I think it would actually go in a negative direction. So I don't think that's a good idea.
Now, Ed, we're almost out of time. I only have about a half a minute left, but I really
Meanwhile,
want to
the
know the
SPY
answer
is
to the next
raging
question.
upwards.
And that is, when I look at the stock market, had discussions this morning,
Yeah,
many believe
Microsoft
it's
has
doing much
everything
better
there
than
in the
anything
store,
could
ready to
possibly look
fucking
regarding
go.
the economy
Well, I don't
a year
know.
or
I
two
mean,
down the
who
road.
knows with
My
the
thought is,
coronavirus
you
and all
know,
that shit.
investors invest in
I don't
stocks,
know.
but in order for those companies
I would
to make a
imagine they're
profit,
pretty stocked
much
up
of the
though, but
economy
you never
and
know.
many
You could have
workers
seen
have
a
to be
flood of
working and
people
drawing a
building home
salary.
PCs
Can you
or
equate
something while
what you
they're
think about
fucking
the
stuck
future
at
with
home.
where
Who
stocks
knows,
are today?
You know? But they'll have.
Well, if you look at the
they'll
stock
probably
market, it's down, depending on where you date it, it's down 10, 15%. So it's still down significantly. And if you think of that as a forecast of long-run GDP, if we thought that GDP would get
I mean,
back
you could
to,
go
say,
there
its
right
February
now.
level within
I know
6,
power
7,
supplies
8
have rocketed up in
quarters,
price because of
that
Rona.
would not be
You
inconsistent
could go there
with
right
what
now
we're
and
seeing
get
in the stock
everything you
market.
need to
We
build
would
a
take
computer
a
today.
year and a half hit, but from then on, we'd be
The
back
OG
to where
says
we
the
were
rig count went
before.
from 36
and
to
that would
fucking
reflect-
8.
I like that answer, and I'm going to have to leave it there. I'm out of time, but I like the way you framed it. You're not looking 5 to 10 years down the road. I thank you for your thoughts. John Fort, it's all yours.
All right, Rick, thank you. Now let's take a look at shares of Apple. The Nikkei reporting that we'll begin seeing some
I think I
classic
might go in there
AirPods
right
made
now.
in Vietnam
Go to
as
call
Apple
for it
continues
first.
to adjust its production.
Dude, they're gonna be
CEO
like,
Tim
yeah,
Cook
we
likes
got
to note
everything
that
you
while
need, just
a lot
come
of
on
assembly
down.
is done in China, Apple's supply chain is global. Look at Apple stock there, up a little better than 1.5% today. Don't go anywhere. We're back after a quick break.
They're gonna be like, sir, come on down. Yes, we are open. Fucking A, just when I'm trying not to spend money, about to drop $1,500 on a computer. But I need to start streaming again, man. Fire it up! We're so fucked in the oil business, I have no clue how we still get paid. You don't, you're fired. I'm just kidding. Is Tesla crushing it right now? They're like, we make cars and it's moving. $800 a share. Holy shit. Tesla's raging, so the QQQ is raging, huh? TQQQ is raging. Rage. Is TQQQ the move? Is the QQQ the move? Is it just tech? Just get in tech. Just be in everything tech. Check it out, bro.
We were just talking to the mayor of San Diego about this. California slowly beginning phase 2 of its reopening plan this morning as some small businesses and customers venture back out into normalcy. Jane Wells is about 90 miles north of San Diego at a Huntington Beach surf shop with the story. Jane.
Hey, John, over the last 8 weeks, California has paid out nearly $9 billion in unemployment. But today, certain stores like the Rock and Fig Surf Shop here are being allowed to reopen with new safety rules.
To
though
Rock and
still no
Fig
indoor
Surf
dining
Shop.
or manicures and haircuts yet. But Governor Newsom has been under increasing pressure to reopen the state, and some places started early, especially here in Orange County, where a restaurant jumped the gun and was immediately swamped. But the skyrocketing cost of COVID-19 here, along with the tremendous drop in tax revenue, has turned our $21 billion surplus into a projected $54 billion deficit by the end of next June.
So when you see those numbers, they should get your attention, and understandably so. But what may not get as much attention, and I think deserves your attention equally, is we're better positioned to deal with this shortfall than we have shortfalls of the past.
But he says recovery will
ADMA
depend
is
on more
fucked.
federal aid. Rick Fignetti has owned this store for 30 years, finally opening after being closed for 2 months.
As far as sales go, I don't know, because everybody's been out of work. They're kind of broke, people eat, but surfboard's kind of a little different story,
Fignetti has been getting by on savings, and his landlord cut the rent in half. It's just a small part of a very big story, Carl, but of course to Fignetti, this is everything. Back to you.
Damn.
It's such a big story, Jane. We got the whole country hoping for the best. As Blankfein said on our air earlier in the week, it's not economy versus health to a large degree.
Maybe we're just going to test the
is
base.
health
I
when you
don't
look
know.
at life
It looks
expectancy
fucked
and
right now,
GDP.
Brownie. We're
Jane,
fucked.
thanks. John, have a good weekend, everybody. Let's get to the domino in the half.
Revenue is up 189% year over year. Stock goes down.
All right, thanks very much, Carl Quintanilla. Our breaking news coverage continues right now. Welcome to the show. I'm Dominic Chu in for Scott Wapner today. Front and center this hour, a historic and sad day at the same time for the American economy. The unemployment rate hitting levels we have not seen since the Great Depression. More than 20 million jobs lost just last month alone, but stocks keep powering ahead. Is the market out of touch with the real economy, and where do we go from here exactly? We are going to debate that this hour with our investment committee today. They are Josh Brown, Steve Weiss, Brenda Vingello, CIO of Sandhill Global Advisors, also Megan Shue, Head of Investment Strategy at Wilmington Trust, and Michael Farr, CEO of Farr, Miller & Washington. They are our committee. Let's get a check on the markets as they stand right now. So we have one of the worst jobs reports ever, but stocks are marching higher. As you can see, they're green across the board. We are right near session highs. For the Dow, that would be up 430 points, but we are right near there for the S&P 500. So let's take a look at what exactly is driving things. And for that, we'll start with Josh Brown, because you're in the box right next to me right now. What exactly can you make of what this jobs report told us, and why does the market continue to rally given the fact the economic prospects may be so dim?
Okay, so the first thing I want to say is that I'm pretty comfortable saying that this is the worst monthly jobs report any of you watching me right now, will ever see for as long as you live. This is it. This is the ugliest you will ever see. We have lost 20 million jobs.
Wow.
The all-time record was 2 million jobs after World War II. And the worst we saw during the Great Financial Recession a generation ago was 800,000 in a month. So you're not going to see this again. I think what's important to point out, and I want to be very delicate in the way I say this, Wall Street is coming around to the fact that, for the most part, the jobs that we've lost are at the lower end of the income scale, which, from a societal perspective, is absolutely disastrous. College graduate unemployment rate is really like 8% right now, which is still terrible, but looks nothing like what we're seeing in segments like leisure and hospitality, where it's like 20% plus. And unfortunately, those are not the jobs that register the highest in terms of the real economy, in terms of how much those households spend. So that's something that you're starting to hear economists talk about, Dom. It's a little bit more nuanced than is really necessary. Either way, if we don't get back 2/3 to 3/4 of these jobs over the next few months, it is an absolute collapse for real people's lives and very, very dangerous. So I'm hoping that not only is this the worst number we'll ever see, but it gets rectified very, very quickly. We cannot have a situation where people have to live under these conditions for much longer.
You know, Steve, Josh brings up a great point here. Oftentimes, folks on Wall Street get made fun of for using the word hope when it comes to investments, because hope is not an investment strategy. However, in situations like this, hope becomes important because hope tells us that things will get better down the line.
We need hope,
It may
chat.
not be an investment strategy, but it's still something that people have to look forward to, that times will get better. And is this market right now saying that times will get better in a fairly quick fashion, Steve?
Well, I don't think it's hope. I think there's another H word, and that's history. No matter how bad the declines have been, whether you go back to the Depression in the late 20s, early 30s, whether you go back to the war period, even if you go back to 08, history tells you that you always recover. And the recoveries over the last 10 years have not taken years, they've taken months to start bouncing back. And over the last few years, they've been V-shaped recoveries. Now, we've never seen anything like this, and this is truly disastrous and it weighs on your consciousness as well as your pocketbook. So I agree with everything Josh said. Look, sometimes I'm fairly long the market, and sometimes I feel like, how stupid am I? With all this bad news, what am I doing? Am I Nero, like fiddling while Rome's burning? Don't know. But on the other hand, while I have a view
I wish I was Jean-Claude Van Damme in Time Cop right now so I could go back in
what the
time.
markets are doing. What I'm paying
That's why I'm
attention
investing
to are
long
the
term,
stocks
yeah,
that
for
I
sure.
own and how they've been performing in terms of an earnings base, in terms of what they're reporting in earnings and their guidance. And I've got to tell you, if you're in the right sectors, you're doing quite well. There are a number of companies that reported, technology companies that I own, that beat current guidance and guided higher for the second quarter. Of course, they suspended guidance for the second half of the year. So my advice is don't buy markets unless, of course, you're not an investor that can go and take apart companies. Then sure, buy the index. But we will go down at some point. That's going to happen. But look, the hope is that we get a vaccine, and we get a vaccine within the next 6 months to a year. And the hope is, my hope is, that everybody can get back to work and start making a living, take care of their families, and aren't oppressed by conditions, that there's some light at the end of the tunnel. So it's critical to have that hope. In terms of the market, yeah, the disconnect between reality and the market is at the widest gap I've ever seen. So you've got to know what your tolerance is for volatility and how far you're looking at. So going back to how I started historically, if you can look out far enough, you'll be okay, and people will get back to work. That's just how things cycle. And what we're seeing right now is an incredibly quick, abbreviated cycle of dismantling of an economy. But when we come out of it with all the stimulus that's out there, it's going to drive the economy better, faster, harder. And yes, while it's unfortunately the lowest income people that are disadvantaged now, they will also come back to work. Not everybody's going to be disintermediated by technology. So my advice is be patient. The government needs to do a lot more to pay these people, a lot more, and hopefully they do that.
All right, so that brings up an interesting point here with regard to just how much is
Are you able to move all your money to
picture playing
BTC
out there. Over the long
ASAP?
term,
No?
we know that you're not a
But I
stock
do have
market
some in
investor
crypto.
unless you have some long-term optimism about the future of America and the markets and economy overall. And for that, maybe Brenda,
I've not had
I'd like to
spot
turn to you
puts.
here because I'm looking at some of these stats on my screen, and we are roughly, depending on which measure you look at, just around 30% off the closing lows that we saw back on March 23rd. It's the Dow, the S&P, the NASDAQ, even the Russell 2000. You pick your poison, it's all up pretty big. How much of a recovery is now factored in, given the fact that we're only about 14 or 15% off record highs in the S&P, and we've rallied some 30+% off the closing lows back on March 23rd, Brenda? I don't get it.
Yeah, I think it's a great question, and one that a lot of strategists grapple with in understanding exactly how this is going to play out and just how much is already being factored into the market here. But I think if we look at what has worked and the concentration in the market,
Well, I make money in stocks at 60-40 for me.
that have worked the most are those companies that are really benefiting in some
more
way
have you
from this
made as
environment.
opposed to just
But I
buying?
think one
What do
thing
you
that
mean?
we think is important to keep in
Oh,
mind
him
is even
scalping?
though this market recovery has followed some of the real classic recessionary recoveries that we've seen in the past in terms of timing, in terms of looking at just economic data starting to bottom and when the market does start working long before the data gets better. But I think this time around it's different because there are two very different scenarios that could play out here. We could, as Steve said, have a vaccine that is announced. There's certainly a tremendous amount of energy being put into finding something. There are, I think, now 8 human trials going on. So it's a high likelihood that we do find something there, and that causes the market to appreciate further. However, we also
national gaming
don't know exactly how this reopening process is going to play out. And we certainly could have a scenario where overall illness begins to increase again, and there is some kind of, maybe it's a hybrid, not complete stay-at-home directive, but some kind of hybrid that does crimp economic growth and does prevent people from getting back to work. So in our view, it's hard to position for both of those scenarios. So I think staying disciplined and finding good values when they occur in the market is very important, and keeping some exposure not only to companies that are thriving and doing well in this environment, but also having some exposure, not a lot, but some exposure to those companies that really would benefit in a recovery scenario.
All right, so that recovery scenario is arguably being fairly well priced in right now, at least to the upside. And Megan, I'll turn to you for this, because as we take a look at some of the best performing stocks and sectors since those lows, you look at the list and the top is energy. People have said that oil prices are probably a better proxy for what's happening with the global economy because of COVID-19. It's arguable, but it's certainly a thesis out there. Energy stocks in the sector up 60%. Materials up 36%. Technology up 34%.
Early
Consumer
today,
discretionary up
shit I gotta get done.
33%.
It's a Friday.
Those are
We're
all
not making any
classic
trades
in terms
today.
of economically sensitive
We're just
or
sitting on our
cyclical
square.
sectors, and they are far and away outpacing the market. So what exactly does that tell you then, Megan, about whether or not this is one of those instances where we are free and clear of those lows that we saw just about a month and a half ago?
Yeah, we're definitely seeing a rally from those cyclicals, from those even lower, I would argue, lower quality and deep value type of companies and sectors.
We're gonna read the stock
We
guy.
think that it's a little bit too early to call that sustained rally. We prefer to be in, and we are finding opportunities. We're a little bit more cautious at the overall asset allocation level, and we are underweight to equities, but we're finding opportunities. If you think about within the equity market, we are looking for names that will do relatively well, not only in the current environment, but beyond on the other side of this. And so if you think about what that might include,
Bank of Nova Scotia, Bank of Montreal.